I'll sort stuff out, you know, as we go. But good afternoon, everybody. Shake my hand. Today is going to be fun because I've got Zoom opened. Got a few people on the Zoom site, and then I've also got a YouTube chat live going. So it's going to be just double the attention that I need to kind of like split myself, right? But just to make sure, I know in Zoom people can hear me. If you're watching on the YouTube live and you're there, just let me know I'm clear so we can start. Struggled to kind of like get the stuff loaded on time today. I forgot to refresh my computer. But yeah, so I'm just waiting for confirmation. If you guys can hear me, I can hear myself. I can see the feedback. So I'm going to take it. The audio is clear on YouTube, all right? Because I can actually hear the feedback going on there, right? But otherwise, hope everyone is doing well. Let's see what we can find today. If you're new, the 365 Trading Academy, we are supply and demand traders. That's how we normally operate, number one. Number two, what we do with these war rooms is essentially map out, right? So we're trying to map out some trade setups for the week. So I'm looking at the first week of August, number one. So we call that short term, hours to days, right? From Monday into the market up until Friday. But the general nature of our war rooms are we have the ability to also spot long-term swing trades, or rather medium-term to long-term. So some of the trades we can find today, we mark them on our charts, we say pending orders, and we keep it moving because those trades could actually be at play 2 weeks from now, 3 weeks from now, and we want to be in the money. All right, essentially that's how it works. Just if you're in the Zoom room, please do mute your mic. Good afternoon to everyone there in the Zoom room, and good afternoon to everyone there on YouTube. All right, cool. So one more time, if you're watching on YouTube, can someone just confirm on the chat box that you can actually hear me? And then we can start, guys. We can start. I think we will all agree that last week was quite a fruitful week in the markets. There was a lot of action, loud and clear. I'm doing good. Thank you so much. Fantastic. Thank you for that confirmation there, Alex. Last week was fantastic. Fantastic, volatile as expected. FOMC did whatever they were supposed to do as expected. And we actually got a couple of plays, you know, at the end of the day, right? So I want to go straight to the charts with you guys, if that's okay. If there is any specific chart you want me to look at tonight, please let me know. So if you're on Zoom and you want me to look at a specific chart or asset, just type it there. If you're on YouTube, just type it there. And then I'll make sure during my plan that I give those particular, you know, assets a squeeze as well, okay? But if you really have something that you wanted me to look into, now would be the time to just let me know to look into it. And I promise you to do just that. Right, but until then, I just want to talk to you guys about a couple of things. Why is the screen, like my computer is falling apart? Not falling apart, it's just, I guess, overworked. There we go, that's better. Right, so let's start off with the dollar index, right? Because I always start off with the dollar index just to get a sense of where markets are going, right? Currency strength. And the main thing that we look at is the dollar, because if we can understand the dollar, we can understand a lot about geopolitically where we're speaking, where we're sitting, where markets are going. And while I'm at it, I'm just going to quickly open Forex Factory just to see if there's absolutely anything that we need to catch up on. And I'm going to move the YouTube chart to screen 3 so that I don't have it distracting me, and then I can just attend to any questions that might pop up. So just feel free to ask questions wherever you are, right? And then I'm going to wait for this to load. Okay, some people entering the Zoom room. I feel like I'm multitasking today, right? So I've got a pound USD, not a problem. We're going to definitely look at pound USD, right? So real quick, if I can just do a filter session with you guys and just put high impact news for this week, just to see if there's anything crazy that's going to shake the markets, right? We kind of want to know, right? There's going to be manufacturing data. I see the forecast there is just a tiny, you know, 0.2% higher, right, than the previous. So they're just trying to maintain a steady growth. This is very big for AUD, a statement. This tells me immediately that we need to look at, AUD pair. So I'm trying to find movements in the short term, right? Hours to days. So this week, right? So I'm trying to find some movement. So if the governor of the Reserve Bank of Australia is talking on Tuesday, I want to make sure I understand what my Australian peers are shaping up to do. And we don't trade the news, but we understand the volatility it creates within the market structure, right? So we want to find the market structure, right? So this is like unemployment, right? It's a big deal. It's a key economic indicator. It's like the NFP, but for other countries. So unemployment rate, employment change, so QE is up big. And I'm already in a trade in NZD, which might not even last. But I'll talk to you guys about that. So we need to look at NZD pairs today. We've also got a request to look at pound USD from Lucky. Lucky, how are you doing, man? Long time. How's trading going? Let me know. Right, then we've got the ADP non-farm roll pay change, right? We know NFP is a big deal, but I don't think this is NFP. This is it's that report I did a video about. Remember, if you go through the 365 Trading Academy channel, I did speak about how there is non-farm payroll on Fridays, but these guys, ADP, always give markets something to work on the Wednesday. So markets start to price in. So if they're super bullish on NFP numbers, they create a tone and a sentiment. And what happens is the rallies sometimes start early as Wednesday. So by Friday comes, people are surprised why there's a little bit of selling off or the inverse, right? So this is a big deal. Right, when these guys drop their report, it's a very big deal. It's going to set the tone for Friday. Where's Friday? There we go. This is Friday, the non-farm payroll change. You see this on Friday? This, the projection with 850K last month. I did live sessions with you guys on NFP. I did 2 videos on this on our YouTube channel. And if they're moving from 850 to 895, so they expect that more jobs were created, right? It's not a significant amount, but about 45,000 jobs. It could be considered quite big. And we've got the ADP here, sticking quite lean, right? So this to me looks like a reduction from 692K, their previous, I think, to 645. So we've got some contradictions in the markets now. So be very careful of this stuff. So I'd very much pay attention to what's going to happen on Wednesday, right? Just to know, and then we can trade NFP on Friday. I'll prepare you for that on time. And then on Thursday, we've got a lot of pound news, right? So asset purchase, it's not really my thing, but it could be important. I don't really follow it much. I do need to check this out. Monetary policy, the Bank of England, whatever the banks are doing, I want to be a part of, including asset purchase, but really monetary policy reports look into interest rates. Interest rates look into strengthening or weakening of a currency. So I want to be a part of that. Then there's going to be the vote. We'll see how that goes. Monetary policy summary. So some pound is going to get some shaking. So we need to look at some pound pairs. And then on Friday, we've got, NFP month-to-month change on CAD news. Starting to feel like we want to look at every single asset, and I don't think AUD got that covered, right? So if that's fine for now, I think I've got enough. So I've specifically looked at about 6 charts. I was just warming up in the afternoon. I'm preparing myself, and I see there on the YouTube we've got USDCAD. I'm just making a note here for myself. Gold and silver, fantastic. Gold and silver, right? So I'll have a look at those as well for you guys. Was down 45%, but now I'm on break even, getting there. Okay, cool, Lucky. Right, fantastic, man. It's very important that the fact that you understand your statistics, right? You can tell. I'm very proud of that. That you know how far you are down. What I'm wondering is, well, we could work it out if you provide your statement. So maybe when we do the one-on-ones, we'll talk about this. So just mark this in your trading journal on the 1st of August that you're down 45% and now you're at least break even. And then we can then structure that around what happened in the past. So the type of trades you've been taking, etc., etc. But thanks for that feedback, buddy. Yeah, and just keep me in the loop. Keep me in the loop, please. Right, cool. So traders, let's go. We've got quite a bit of stuff to chew on in terms of preparing for the week. What I think I would do, which will save us all time, is let's look at the 6 charts that I looked at by myself earlier on, right? So I've seen a couple of charts. Some of them have opportunities, some of them don't, but it's just nice to get a sense of what's going on. And I'd say, like I said earlier on, we'll start again. We always start with the dollar index. I always want to know what's going on with the dollar, fundamentally because it is a big global micro currency, right? So if you're new to the war room, then sure, it's worth the while breaking this stuff down. But if you are a regular attender, you will know that we've done a number of the dollars. So here's a naked chart of the dollar, or naked enough anyways. Right, so this is the dollar on a governing time frame, on a very big time frame, on a banking time frame, right? A banking time frame, so to speak. This is Trump's presidential cycle, essentially, right? So Trump started off on a governing supply in 2017, and then exited, you know, technically speaking, because of a supply. March 2021, price returned to the supply and drove price all the way down up until November, which was the end of Trump. And then this is Biden, right? The Biden effect, or market simply reaction of a demand. Now I still debate this a lot with a lot of my senior traders. Fundamentally, these are more positional traders, so they're like long-term macro perspective. The stuff we do there is very much long-term macro perspective. Let me know on YouTube if the chart looks clear. It looks clear enough, but just in case you want me to zoom it in a bit, just give me that type of feedback. I'll just keep glancing from both chat boxes to see if there's anything there, right? So essentially, then the debate is, should this constitute as a supply? That's the debate. And like most of us are agreed that it is a supply, right? We do have a situation where this could easily sell for a bearish engulfing candle. And so because of that, you know, it makes sense. Some of us, however, are of the mindset to say, if it is a supply, it's a terrible one, right? It's a very weak one, or at the very least, it's now been tested. And so we understand glass effect, etc. In any case, at least within the senior traders, there is some type of hegemonious agreement that there is some type of selling pressure here. And markets, last time they arrived here in April 2021, dumped for 2 months straight. And now markets have finally arrived at a similar level again. And at a similar level, I'm speaking about something that looks like this. And you remember, fundamentally, because I did get a lot of messages, you know, last week, Friday, which I still haven't responded to, or at least not all of them, about how I knew, you know, or why I knew, or why I thought we were going to be, you know, dollar bearish for a couple of weeks. And it's stuff like this that we cover in the course. So we're looking at, well, where is price now? And if there's an agreement that there are more sellers than buyers, and we can track that by our order flows, if the banks are selling, we want to be on the selling side. And so price is dancing inside a very big bearish structure. Give you guys a presidential perspective, because I know a lot of retail traders don't have the 3 months time frame. And it's quite important that I share that with you guys whenever I see you. On the 3 months time frame, you know, there's not much to change. I mean, I would tighten this like that, maybe, you know, from a 3 months perspective, but you can see markets wicked in and then just lift, right? And then there's a bullish engulfing pattern, right? So markets should have, you know, with my bullish engulfing patterns, when markets get there, I want price to touch the top part of that base there and leave. I never want to see this deep entry into it, right? I'm not saying those buys don't work. It's just something that I don't like. But markets did find some type of demand, right, on the monthlies, weeklies, etc., and they've been ranging up and down. So from a presidential perspective, you can see why some people are hesitant to call that a very strong supply. And if you know me, you know that my next real dollar bull run is somewhere down here. And I've spoken to you guys about this in the past before, somewhere down here. Right, this will be like almost like an Obama rally, right? So it's like when Obama's policies kicked in, very strong in 2014, strong rally to the upside, right? Not a single amount of price has been able to come, redo, undo all of that type of this movement here. So I would want to become an extreme dollar bull one day when price gets there. And that could take a year, that could take 2 years, that could take 3 months. You know, it just all depends on price, structure, macroeconomics. But until then, for now, I'm still a dollar bear, all right, until this area is taken out. So to give you a better scope so that people don't ask me this, you know, 2 weeks from now, I will be an extreme US dollar bear right, up until price breaks the $94.71 mark, right? And I remember it's a war room, so I can't do too much teaching tonight because then we'll run out of time. So until price does this, right? If price comes back, makes contact there on the other side and goes up, I'm a dollar bull, right? I'm not going to be stubborn, right? I will accept that they've removed the supply, opened the roof. The real money is pumping price up there, right? And it would make sense. You know, Biden is a Democrat. Democrats do build economies, you know, a little bit better or faster than Republicans, so to speak. Not to make them angels, but I'm simply saying, economically speaking, if you look at the chart, look at the dollar index, right? Democrats have this potential, right? If you see where Obama came in his presidency in 2008, 2009, again, he had a beautiful demand area to play with, right? And all he did was just take that dollar up, strengthen the currency, strengthen the economy, right? And Republicans, you know, they've got the downsides because of the aggressive policies at play. But all of that stuff for another day. So I wouldn't be opposed, right, for me becoming a dollar bull, but I would need my supplies to be removed and markets to show me that. So I never do stuff. The banks are not doing it. I don't want any part of it, right? If the banks are doing it, 100%, right? So that's kind of like particularly what I'll be interested in. I hope there's no one knocking on heaven's door in the Zoom room and I'm completely unaware, right? Doesn't look like it. Let me just put this window out there. Okay, so we've got a supply there. I spent way too much time on this index, right? But just to help everyone who's joining us, right? And price inside that big, you know, monthly supply is playing around at a weekly level it created in March of this year, right? So until this March, technically March highs, but still considered lows, right? But March highs nonetheless. When I say March highs, I'm talking about this area here, right? But you can see in terms of price, this was a lower high. But until this lower high is taken out, so that means until markets push up and close and then retest on the other side of this, I'm not interested. And even if that was to happen, I would still want this area contested with. So essentially, this is what I want to see for me to become a dollar bull, right? And even then, there'll be moments in time where I change my mind or slow down. But predominantly speaking, I am a dollar bear and I have been for, this is the weekly time frame for 1, 2, 3, 4, 5, 6, for about 6 weeks. Right, and finally now, the type of movement, the type of aggressive movement has finally taken place. A lot of retail traders were caught up in an uptrend. You'll see it more clearly on the daily time frame. All right, but I think I did a very fair, good job of warning people against this, you know, as many times as I could, that this uptrend or upward channel, or whatever you want to call it, was going to be extremely short-lived. Regardless of what the indicators were saying. We did a lot of stimulations, by the way, at the core. Some content that we're working on putting out in the future on the YouTube channel, where we stimulate indicators, compare data and your indicators. So we're looking at all the big indicators. For 3 amazing guys working on that kind of stuff, because if I do everything, nothing will get done, essentially. But the first test, right, of this upward movement, of this confirmation, is one of the reasons why a lot of people got burnt up, right? And the reason why this failed, as we've said many times, is because markets had arrived at an area of value where supply exceeds demand, right? If you look left, we've got a supply. And there are many things that qualify for a supply, right? If you take the course, or at least when I find time, I can do some content around that kind of stuff. And then price dropped, right? So price has been dropping as we planned. Last week, the FOMC was dovish. I did a short video explaining all those things. And there was some great conversations on our public Telegram group. We ended up doing like voice notes because I was driving, explaining to people what this stuff is, right? So what is dovish? And the one thing I forgot to explain is when the markets become dovish. Remember dovish? Let's get a simple Google explanation. Dovish sentiment. Oh, there we go. Dovish meaning, right? Let's see what Google says, and then I'll give you a good. I think I'm going on fiber this week, so I'll not be using Wi-Fi. This has become a little bit too slow. Dovish refers to a tone of language used to describe situation and associated with implications for actions. For example, Federal Reserve Bank refers to inflation in a dovish tone. It's unlikely they would take aggressive positions. Okay, that's fine, but let's see if there's more. More concern on promoting economic growth. So the key word here is concern, right? Jobs, so they want to make sure job numbers are up. job numbers are up. They want to make sure that job numbers are up. NFP, they want to make sure that job numbers are up. Key economic stuff, right? And when you're hawkish, you know, they want to control inflation because things are going well. Pump, 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 right? So dovish is a dump. The one thing I forgot to explain on that voice note on Friday, I think it was Friday, about a dovish total. When I say the FOMC is dovish, do not be surprised if the dollar is strong. Because remember, the dollar acts as a safe haven. I mean, I've spoken about this in different places at different times, but just to relink things, the dollar is a safe haven. So when things are dovish, diving down, when things are, you know, when there's concern, we need to get these jobs done, then that safe haven status pumps in real quick. The confluent, you know, part about it was markets had arrived at what we kept telling you guys was going to be considered a transitory demand. I don't think this demand is going to hold forever. Okay, I'll be the first to tell you that. Number one. Number two, if I look very carefully, very carefully, I did see when I took this trade on my live accounts and I exited on an H4 demand. I feel like I exited too early, actually. But if you look very carefully, one would argue that there was a gap to the downside. There's a market gap. If your broker is fair and square, they would have printed this index with a market gap. And if you start to spot gaps on time frames as big as the daily, right? To me, again, it tells me that that sell bias that I've been talking about is extremely strong. So I'm not too worried about this green candle. In fact, in the academy, we know that a good day in a bearish market could mean the potential for this, right? That's how we not get our 365 candles, right? That's exactly how markets could come here just to go back down, essentially, right? But we'll see. We'll see what happens this week. But as far as right now, for the next few hours to a couple of days, price is at a daily demand. And so there are two things you can do. Number one, align yourself with that short-term move where you're looking for short-term buys on the DXY, but also on dollar pairs. Or you could prepare yourself for the next wave. And at 365, I'm really hoping people, generally speaking, are moving towards that, right? Not just trading for today, but also I am supporting trend line from May, you're supporting a trend line from May 2nd, 2011. So I want to quickly address, there's a question down the Zoom room from David. 2011, David. Right, let me go to the weekly time frame. Might be quicker to find. 2011. There's a trend line. You're spotting a trend line. Just want to see if I can see what you see. Right, so I found 2011-ish, and I'm now looking for May. David, buddy, do you want to just hop on the mic there on Zoom and just let me know what I'm looking for? So this is May. Trend line. Which trend line, David? Up trend line, downward trend line. Do you want to just jump on your mic real quick, buddy?
Up trend line.
So this is the 2nd of May here.
Yes, from that down point.
Yeah. You mean this one here?
Yes, going up.
Like that?
Yes, until where we are today.
All right, let's see what's cooking. I don't remember doing this, so that's I mean, I've got my long-term 2018 trend line on my main chart. So this is nice, something new. But hey, David, look at that. Yeah, you see, so essentially you're agreeing with the downward pressure now, right?
Yes, I do.
Yeah, because essentially this trend line that you've just spotted, which I think is quite interesting. I mean, I'm tempted to say there were short-term inward, you know, whatever upward areas here, but essentially markets align themselves with that dip more. So your trend line, I think, makes a lot of sense, sir. And again, yes, it would be very difficult for price to break free from there because once again, if you look very carefully, we've drawn our trend line as accurately as we can according to our rules. That trend line sits inside that daily supply and is what markets touched, then dropped. Good eye, buddy, good eye. I literally didn't even see that trend line. I was just trading strictly off, you know, that module 1 textbook stuff. Well done on you. Yeah, so there is some serious downward pressure. And right now, prices at a daily supply, you know, at a daily demand, I apologize. And the question is, well, what do we do? I haven't changed my mind, right? I am a dollar bear for a very long time, right? So this is what I'm looking at on my chart. I just need to exit from that other chart because it doesn't give you other small time frames. Now, you will know I've been talking about these levels for a very long time because these are the banking levels. Like the bank does something on the charts, we have to pay attention to it. 16th of June, FOMC pumped markets up. This is where markets are. I want to see a full play out of a downward trend all the way there. And to do that, we have to remove this daily demand. If we remove the daily demand, there will be smaller demands along the way, like in this red area here, probably an H4, PCP, potential continuation pattern. If you don't know what that is, specific order blocks that we look at when we trade, right? But please feel free to check out our course. So a 50% discount, and I'm going to keep it like that for a very, very long time. All right, essentially just to empower as many people as possible, right? But essentially, I would like to see this removed. First of all, this daily demand removed. So I'm not that eager to buy the dollar yet. In fact, I am in no dollar buys right now. What I can promise you is if price dares me, and by the end of this week or during this week, markets make it back up here, I'm selling again. I'm selling the dollar index again, and I'm going full frontal bearish on my dollar pairs, right? So if this happens, I will definitely be looking to shoot. Unfortunately for me, because of how strong this daily demand is, I will be forced to exit somewhere here. All right, unless if this week markets work on weakening this area of value. So they dig in, you know, like what Bitcoin did to that weekly demand and then shoot back up, right? And then if markets do that, then I'll definitely hold to break. But if right now this daily demand is currently very strong. I mean, as much as I'm a dollar bear, it's suicide essentially to start selling even here. I think price could go down and break it without me. Personally, guys, I'm very conservative with the way I trade. I like my money. I understand how long it takes to grow an account. So I'm not willing to take unnecessary risks. You see this demand, you can tell that the order blocks are intact. Even if your persuasion was to draw the order block like that, which to me would also make sense, there is no ways, right? I'll be willing to take a clean sell from there blindly into the area of value, unless if the weeks leading into that, right, are showing more dovish signs, more dollar weakness and all that kind of stuff, then maybe. The big thing for the dollar this week is, of course, NFP. If NFP comes out, and you guys by now should understand the formula. If NFP is, if they get the jobs, so that I don't have to do an NFP video, let's nail this right now. If they meet this target, see this target there, 895,000 jobs. If 895,000 jobs are created plus, so if it's 896, 898, 900, if it's a positive number here, the dollar will be strengthened. There'll be more strong dollar action. All right. Number one. Number two, the contingency is based on this. This has to drop. Unemployment. Remember, non-farm payroll is calculating how many jobs were created in the past month, in the month of July. So now if my unemployment rate goes up, that's a contradiction. The economy is creating more jobs, but if the economy is creating more jobs and not reducing the unemployment rate, you have a problem. Last month, you got 850K jobs, right? But the forecast was like 700,000. So they beat the forecast. It was beautiful. They made a lot of jobs. The problem was the unemployment also went up, right? So quick macroeconomics. Because of COVID, our way of being, our way of understanding has completely changed the idea of work. We're in what we can now call a COVID economy, right? But technically speaking, it's part of a bigger picture of the lost decade, right? So there are some jobs that are going to be created that are new fundamentally because of the catalyst that COVID has provided in our economies. the fact that I'm doing this via Zoom and that tomorrow I have to do everything else via Zoom. And on Wednesday, I have a board meeting that I have to do via Zoom. Like I no longer even go to my building anymore, right? Because everything is tech-based, right? Most of my teammates have gone back to their homes in Cape Town, Joburg, blah, 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 because we can remote learn. So the COVID economy has created a new sector of jobs, different types of jobs, tech-savvy jobs, right? I've got engineers dropping out of engineering to learn about DeFi, which I'll tell you guys about our program later, much later, because this is actually attached to a 365 scholarship. So it's not really much, it's not for publicity stuff. It's really like if you've got a master's in finance, right? We're looking for crypto engineers, right? For a long-term project I'm working on for Africa. Much later on, but you know, those guys were engineers and they're leaving that craft and they're getting new skills, right? So upskilling. So I'm getting coders who are in the IT sector and I'm bringing them into fintech, right? Finance sector. So the COVID economy globally is creating new jobs. But at the same time, if you don't watch for this unemployment rate and always celebrate that new jobs have been created, you will miss the bottom line. The fact still remains, COVID is also destroying our brick and mortar jobs, right? The everyday basic jobs, the factory workers, the mine workers, the farm workers, and that unemployment rate can also hurt an economy because you want those people employed, spending money, buying stuff, etc., etc. So when it comes to NFP, you watch for both statistics. They must both align. You want more jobs, less unemployment. You can't get more jobs and unemployment going up and think it's going to work out. So this is a big week for the dollar. It will set the tone. Once again, if dollar is strong, you're going to have to dump Euro USD, Pound USD, etc. If dollar is weak, you buy those other things, right? Euro USD, Pound, just like the previous month, right? But I'll try and prepare you guys 2 or 3 days before NFP, right? So long story short, so we can move on. This is the dollar index. I pulled out a fib on Friday before I went to sleep, right? And this is what I'm looking at. Right? Price is still at a PCP level. If I've never taught you before, it's difficult right now, but essentially 0.382, 23.6, our PCP, our potential continuation patterns, where price is allowed to potentially continue the previous trend. We've got a bearish engulfing candlestick at 0.382%. So there is a chance that this pattern of a downward trend could continue, but for how long, right? For how long, right? So don't get caught in the trap, right? Markets like to trap retail traders. Like this could happen. So I'm very much interested at this area and at this area, but honestly speaking, more at this area, right? That's where my heart is, because that's where my golden ratio is. So I'm just going to put a horizontal ray by my golden ratio area. You will note that my golden ratio area, let me just delete this so we have less things on the chat so that people don't get confused. You will note that this is the distance, right? This is where my golden ratio is. It's between up here into this zone that I've just mapped out right now, right? So that's where I'm looking for some action, between here. And if you look at where my golden ratio area is, just to help somebody, this is what you call breaking market structure. And already the market structure was broken. Let's be very clear, right? This was the last dip. This has been broken here. But if someone was wondering, this drop to here, then price breaks this market structure, right? But a break in market structure. We cover all this stuff in our module 3 that no one has seen yet, because I'm still convinced people have not mastered what they need to from module 1 and 2. I'm a very weird mentor, essentially because this is people's monies. We don't want to waste people's time. Fundamentally, you know, we want people to succeed in the markets. That's why we do what we do, right? So there's a break of market structure. That's why my golden ratio is already situated there. When there's a break of market structure, you want that break to happen, and then you want to see accumulation, right? And today I'm teaching again. When I say accumulation, guys, I don't want price to just fly into my supply, into this area of sell. I want a zigzag. I want a channel up. Why? It means the banks are building up the position. Right. So when I get the zigzag, where retail traders were vexed, right? Where retail traders kept losing support and resistance traders, all that stuff. When all that liquidity has been pulled out of the markets and markets finally get to my supply, because of accumulation, I'll be more excited to sell, because the selling part of this thing will lead me down, right? If you remember, I was in a euro pound trade and I was looking at compression, right? That type of accumulation going down or going up is a very important factor to how price explodes in areas of value like supply and demand. So I'm looking to sell there. I really am looking to sell there. I don't think I'll do anything on this chart, until there. If I am cowboy mindseted, I'd look to buy up, but I hardly ever do counter trade. Sometimes I do them, but they're very short term, right? I want to be in a trade where my governor is selling, my weekly chart is selling, my daily chart is selling, and I find an entry point where I'm selling in that line. I don't want to contradict those things. But apart from this, being the golden era, if we go to the 1 hour time frame, right, you can see that this did act as a support for those of you who like to trade support and resistance, etc. So it's a good place to hold. But yeah, really the area of competition is somewhere here, which is still inside the golden ratio, right? And this is how big the area of value most likely have to be. And you can see it again on H4 time frame, right? Realistically speaking, this is where your area of competition is to be if you use that 1 hour supply. And if you're tight-lipped like me, then you're going to have to wait for price to enter here. In any case, this is where all the sellers are going to be the last time markets revisited the trend line that they broke, etc., right? So that, and we should see similar, right? So when markets got crazy strong, when the dollar got touched at 2:30 on Friday, and the London session propped it up, is 2 o'clock, 1 o'clock, 5 p.m., blah, 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 blah. Assets like Euro USD started to dump like crazy, right? So if you saw my public Telegram minutes or notes that morning on Friday, I told you guys, technically speaking, I will be looking to get into some Euro USD sales. And I wanted to limit myself to one asset because I was really trading as a sentiment, right? Not so much a strong order block, right? I sent you guys all these charts on that public Telegram group just to give you guys transparency of what I was looking at. And I explained to you that, look, price hasn't arrived at these significant places. So this could just be a retracement for people who were euro dollar bulls, for people who bought down here, because we bought down here and I got out. But those of you who are still in, if you're still in, I'll remind you, we bought there because the dollar was falling. Right now, the dollar is coming up, daily demand. So this could be potentially a short-term retracement. You just pull out a Fibonacci and you figure out how long it's going to last. I'm still waiting because what I want on this chart is more pump. I want Euro USD to go up because I want to kill it there, right? At that FOMC level, I'm still waiting similarly on that chart, right? But yeah, enough of a long-term market recap of what happened on Friday. It helps us understand what's going to happen during the week. The first chart of the day for me is Bitcoin. Just for 2 seconds. Hey, Samuel, hope you're good, buddy. Hope you're good. Bitcoin, just for 2 seconds, because again, I anticipate I am going to be flooded with questions. So I just want to quickly address them now. I'm not convinced. The whole world is convinced. And the whole world could be correct, right? And that's fine. I apologize for all these other scribbles. Either I was teaching on this chat or my little boy got distracted with the homework I gave him and he just started drawing on the charts. One of the two happened here. So we can ignore that anyways, right? So Bitcoin arrived at a weekly demand, an area of value that we consider strong enough to create an upside, right? And it's complicated how we get to that whole thing, but just trust us, price got to a demand. But when price got to a demand, I've said this many times, it broke the demand. When price breaks a demand, it can rally all the way up, but it's telling me never to use that demand again because they've taken out all the money there. And you can see, right, that money is really working now, right? There's two big full volume candles. The first base actually creates a bullish engulfing, almost to safeguard, that upward momentum. So if you got in on this, I do remember getting a couple of results from people in the academy. I know Dr. Francis and a couple of long-term swing trades from this area there, and that account was doing very well. I don't know if you're watching on YouTube, man, but thank you for sharing. This is 5 traders. Please send me results. Don't forget. I always forget to ask for them. But please keep me in the loop. And I don't care about How many are you winning? Just let me know. Show me your losses, your wins, your progress, right? Because there's no expectation that you must win every single trade. That's crazy. But the expectation is over time, you must start to grow your account. All right. So I can help you, but I need to see, where your struggles are. But I am not convinced about this thing. Real quick about Bitcoin. Bitcoin has broken into minus running up. All the experts and the news articles. I saw some stuff. Let me just get into a clean chart. Because if I've never taught you before, then you don't understand what all these lines are, and it might confuse you. Right. So that's clean enough. I think that's clean enough. Right. So there's a lot of stuff around Elon Musk, as usual, being used as the Jesus of cryptocurrency, which I think is a big mistake. I think it's cool. I love his stuff. Got a lot of Tesla shares, blah, blah, blah. But markets will hurt a retail trader who has no idea where to look. If you want to understand price and where to invest, you must trust your analysis, right? So you see, this is the problem. If you go to other brokers like Coinbase, this demand is technically not yet broken, right? The one that I use, they've broken it, right? But even if they're not broken everywhere, you can tell though, glass effect, right? So we have to use what we see. So let's say you're using a broker that had not yet broken, all areas of value. Glass effect will also let you know that markets are tired, right? Markets are really tired at this area of value, right? There's no ways. There's still a lot of money here. No ways. Emotionally, psychologically, retail traders love defending tens of thousands. Do you understand what that means? It means if I come here and I put 30,000 US dollars, see there, 30,000 US dollars, you can see most of the buys happen there, right? On the left, 37,000 dollars acted as a support, right? If I put another line, it's our war room. So if you don't mind, I can take some time and just cook a bit and teach you guys some stuff. And along the way, we'll develop signals. If I go to 40,000, you can see markets struggled in the past, right? You can see their, resistance. You can see their markets can't break out, dropping some supply on daily time frames on 40,000. And you can keep doing this because it's just something psychological about these big numbers. Bitcoin's going to 60. No, it's going to 70, 80, 100, right? You can do the same thing with company indices. Another conversation for another day. But in any case, at this 30,000 mark, right, markets dipped. So this was a perfect hit on 30,000 right there. Perfect hit, market sustained, markets dipped below 30,000, and there was a lot of blah, blah, blah news and problems, etc. I think it did up to about 28,000, right? Its lows, and then now it's recovering. And so there is talk in the crypto space. I don't want to deny it. There is a lot of talk out there about the potential of the crypto winter being over, right? So now let's classify that for a second. And I'll tell you why they're right, and yet I still am not convinced. I think they're right, but I'm not convinced. Number one, this. So if you like trend lines, you'd have one somewhere there, right? Very structure broken on a time frame as big as the daily. That's quite significant, right? The daily is quite a significant time frame, all right? So if you couldn't get clear trends, clear touches, however you like to draw your trend line, whether you want to get as many touches on it, whether you want to get the lowest highs, the point of the matter is this very structure, which lasted from the 14th of June, give or take, all the way for a month, right? A 30-day bearish tone was broken by a significant order block, mind you, right? Markets rallied straight. Now, I would have been caught dead. Another thing real quick, 365 traders, those of you who come to these war rooms, I think this is the benefit, is when I remember to teach you something I haven't taught you, I'll tell you now, because it's not syllabus material. It's one of those things that you gain with experience. But let me just tell you quickly. If you're looking at a supply, can we agree, comrades, this is a supply, right? If I've taught you before, or if you're in the process of learning, you're going through our online course, you'll see me talk about supplies like this over time, right? Yes, there's noise here, but this is a supply, right? If you talk about basic rules, peak supply rules or imbalance rules, that's a supply, all right? Number one, never. And it's done well in module 3, but let me just tell you now, never, ever risk more than 1%, or if at all take the trade, if markets are going to come like this. Markets come to you straight like this, like a hot dog, like a train, that parabolic push that we see all the time in cryptocurrencies. What's happening here is there's just too much demand, right? It's just taken out a bearish structure. Now, it's getting technical. Module 3 is delayed because like an advanced level. Once you master all the rules in module 1, module 2, then this extra information sits on top of your cake of knowledge like a cream. Remember, I just drew a trend line, and my trend line started here at this supply and ended there at this demand. I've got that tracked down perfectly. So I know there's a supply there, but it is this demand. Listen to me now. It is this demand that takes out this entire bearish structure. It removes it. So what's it taking out? Any single supply in the way, including this one. So when I see a choo-choo train coming across like this, I am wary. All right. So what I do is, and I'll make public the conversation I had with Dr. Francis, because he was sharing his results on this trade. And I didn't say exit. I simply say protect your profits, because markets were approaching a supply, but we're not 100% sure if there was going to be a dump. This is too straight. Like, there's too much demand. You're watching a real bull charging at you, and that real bull will break that supply 9 out of 10 times, because again, the entire bearish structure has been removed. So there is money here to sell, but it's not compared to the amount of money it took to push Bitcoin from 28,000 all the way back up to 40,000. All right, I hope that made sense to someone. So because of that, they've taken out a supply, and then again, you know, the enthusiasm, the crypto enthusiasm is back. You know, Bitcoin this, Bitcoin that, Bitcoin is back. I like I said, for me, just I'll be worrisome. I'll be worrisome, right? If I understand markets the way I think I do, there's nothing like a beautiful sell after a beautiful rally, right? There's nothing like a beautiful sell after a beautiful rally. Now, this cryptocurrencies, it's not strictly institutional. It's a retail trader's safe haven. And what every single person in the world, including myself in cryptocurrency, all we want to see is pumps. Right, so I'm not yet taking buy trades. I've stopped selling. I was in a long-term swing for Bitcoin. I've stopped selling. Right, my portfolio is going up because there's currently a nice crypto pump up, but I haven't made a decision of my next move. Right, I'll announce my decision for cryptocurrencies in 7 days' time in the Wealthy in 3 Years program, because that's kind of like the stuff we talk about a lot there. But I have to see, because I wouldn't be surprised if we get a dump just for a sell, right? And then what's the point of buying coins now, right? If they're just gonna dump and sell, number one. But I don't want to be too clouded about my decision, because obviously, personally for me, I want to see us go down to 20,000, and I think we can. And if we can go down to 20,000, we can definitely touch 12,000 on this asset, right? And if you look at the drop, 365 traders, you will recall that we do need a couple of things at play on our governing time frame. If you look at the drop, right, we've got a turning point, we've got some volume, but if you look at all your other charts on the governing time frame, once in a while you need that one green candle that sets the tone for a PCP, and that could have been the month of July. And I'm saying this to say I could be wrong. This is the moment where maybe price will go to the moon, right? A lot of people are back to calling for 70,000 US dollars. A lot of people are back to calling, people I respect, 80,000 US dollars. I'm not ready for that, right? And if that's what happens, then I'm going to miss out, and that's fine. All right, that's fine. If that's what happens, then I'm going to miss out. Or when that happens, I will then make up my mind, just like the dollar index. So what's going to happen for me on this asset here? I'll tell you now, in case you're not part of our wealthy videos. Watch out for this. Good evening to everyone who's joining us on the Zoom room and on the YouTube channel. Good to have you. If you're on the YouTube channel, please do me a big, massive favor and like the video if this is helping you. All right, if you actually like it. Right, but I'm going to be a Bitcoin bull when we break 50, break 60. So when we clear all of this, I'll be back. And for me, for my portfolio, it's going to hurt me, because the next time I'm making buys, I'm really buying high. I mean, I don't mind dollar cost buying, right? So what I did do was I was selling on the trading platforms here and taking 25% of all these profits to buy. I was buying as we dropped. But now that we're going back up, I'm not yet ready to buy in case I'm buying too high. But if markets break this point, I have no choice but to say, look, Leroy, you were wrong. The retail traders won, because retail traders are retail traders. I can't predict them as well as we can with banks and institutions. Retail traders love instant gratification. Instead of allowing this thing to drop all the way down to 20, if not 12,000, so we can all get a beautiful discount on Bitcoin, they are already back at pumping this market up, because Elon Musk is now saying you'll accept Bitcoin again. It's silly. It's really silly. And I'm hoping for my portfolio that the market punishes everyone for that, right, and dumps again. So personally for me, I'm not yet too ready to actually start to buy coins. I don't mind trading the stuff. So they've broken a supply. You know, the goal now is to just open a trade, you know, or whichever broker you want. Look for a fitting demand. I'm on the H4 time frame and just buy 0.01, 0.02, 0.010, whatever your account size is, and buy and see if it holds, right? But there is a potential that this is going to hold. Now, the last thing I want to tell you about Bitcoin before we can move on, and let me just go back to my actual chart where I've got the whole plan mapped out. Is once again, I'm going to sprinkle that module 3 knowledge into your lives right now, right? So you see how I've drawn these lines on the daily time frame. Still the same Bitcoin chart, it's just that I didn't want this one. There's too many lines and I don't want to remove them. They're important for me, right? So I'm going to remove this line for a second and I'll explain it, right? So you see I've got a very tight, uptrend, and I've told you this before. When crypto, especially crypto and stocks, when they pump like this, it gets to that point of parabola. Just picture a spear, but imagine a very long spear and the soldiers on the other side holding the spear and you're on the other side. The impact of which that spear will stab you is going to be very weak because the spear is now too long, right? A good spear must be the length of the soldier, essentially up to their shoulders, so they can actually control the driving force. When market structure gets too parabolic, too straight, it snaps at the top. It's too weak at the top, price will drop. And so what I'm looking at and what I'm loving is just how tight, this trend line is. I mean, it's almost against like textbook to draw a trend line, because there hasn't even been a higher high, higher low structure. It's just been pump. But if you're just going with the basic retail textbook principle of get many touches on a trend line, you will notice that this doji candle is today's one anyways, is forming slightly outside the trend line, but that's too early to tell. But what I'm looking for is actually on the smaller time frames. Right, so for me, you see, so I'm gonna readjust my trend line, because when I drop to H4, it really shows you how many times it's done a couple of fake outs, blah 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 blah. But if we draw it like this now, which I think will be a better look for it on H4 time frame, just clean touches to the trend line. Because I'm not yet ready to become a crypto bull, even though it seems like crypto winter is over, and again, they could be right and I could be wrong. This one, I'm happy if I'm wrong about, because then the portfolios can flourish, etc. What I'm looking for is this. I've got a line there. So this is that line that you guys saw at the beginning when I was in the daily time frame. I'll go back to daily so you can see. Right, so there it is there on the daily time frame. You see there's that line there. I'm just giving you guys some module 3 juices. Right, and I'm waiting for this to be broken, essentially. So it's not going to be enough for me that they break through the trend line, because I know they are mind games with that. They know they are going to play with retail traders. I want them to come and break this. The moment price breaks through here, that is a candlestick closes on the other side of that horizontal line, and a candlestick opens on the other side of that horizontal line, I'm game. I'm back. I'm back on Binance, I'm back on Bybit, I'm back on Avatrade, wherever I can sell or trade cryptocurrency, and I'm looking for a pullback to sell. I am looking for a pullback to sell. So because for now, I'm still not yet as excited as the rest of the world about this little rally up. You know, it's 50, we lost 50% of value and people are excited about this rally. Not yet convinced, right? And I like the fact that there's been a lot of accumulation, like markets have been giving us, you know, higher highs, you know, low, higher lows, etc., etc. And so the trick now is to wait for either a break of market structure into a supply, must go back into a supply that I guess it's still to create essentially, which could be found somewhere on the left here, right? So we'll see. So for me, this is a chart that I'm just watching. It's in my watch list for the week. I hope that helped you. Right, then NZDUSD is a trade that was also one of the trades that charts I looked at before the war room. I just want to finish all the charts I looked at, then I'll do the ones that you guys remember. I shared this chart with you guys, it seems. These notes look very new. I shared this trade idea with you guys on the what's it called? On the public Telegram group. If you're new to 365 and you don't know, go to a public Telegram group. After the video ends, I'll give you guys a free link to there. I will be trying to be as active as possible. You know, I'm really working on my social game. I'm not the most social person. There we go. I've got notes in here for you. Now, guys, this is important. What I'm trying to do this year is to see if I can really dump as much information out of the 8 years of experience I have to platforms like YouTube, just in case, you know, there's every time I get busy. I was sick for like 6-7 days, you know. Imagine people not trading because Leroy is sick. That can't be life. I don't want to create a Moses syndrome, you know, the one leader. No, I want to empower people who need to learn how to do this themselves. It's the one main reason why we don't do account management for individuals. We can trade corporate accounts, but we don't trade for individuals. Individuals must become self-sufficient. All right, that's the only way we can change the game in Africa. All right, until that's done, Africa stays where it is. All right, but anyways, this is NZDUSD. Let's first look at it from another chart without the notes, so that because the notes are going to get in the way, and then I'll talk to you guys about what I've put in front of you. But I did share this stuff with you guys, and I actually took a trade on Friday, but I don't think that trade is going to last. I'm very worried about that trade. Let's start again. Top-down analysis, NZDUSD. Right, let's see what we've got here. This is what we've got there. Right, so NZDUSD, still choppy. There we go. Got a long-term, you know, bearish trend line structure, broken over there. I can remove this information. Notes, price hit a supply. Whereas one of these supplies could be this one, could be that one. You know, you're spoiled for choice. The point is, it's time to drop, and so markets dropped, right? If you want to understand how supply and demand works, you know, your life becomes so much easier, right? And then markets have just been, you know, vehemently, surely, persistently grinding lower as they should, right? Because they hit a supply, a governing supply, right? So now let's extend the chart and make it a little bit clear. There are these levels that I'm waiting for on this chart, like this one here, like 16 June, right? FOMC, where anywhere there where there's NZD, USD, any USD pair, I'm very much interested in monitoring when price gets there. I'm convinced that the banks sold that market, you know, bought that market too fast from a dollar perspective. Hence, NZD has been falling since then. If you look at this drop, the latest drop starts there. So if you draw a Fibonacci, you know, from there, first leg, sorry, one. Right, swing high, swing low. You can see our golden ratio is holding price in, golden ratio holding price in, and then now we've dropped to the 50% areas, right? So it's starting to get slowly exhausted, but it's happening, right? And then markets have removed the demand. I can remove that there. Okay, that's number one on the daily time frame. Then on the H4 time frame, we've got a situation. So I am in a very contradictory trade, but honestly speaking, if I lose the trade, it's a $50 US loss. So I'm not too crazy. But what I'm trying to do is I'm trying to build a model. I'm trying to see because module 1, module 2, right, is mastering the basics. Then module 3, everything of mine takes a year to develop. A lot of traders don't know this stuff. 365, I live by that. I want to test it in different quarters, different cycles. So when you ask me to produce a module, I will produce it for you, but I'm going to take my time testing. So I've back tested my module 3 with over 300 trades, and then we ran it through a bot, we did another 300 trades, very happy with that. Now we're checking tones and cycles, and the more FOMC meetings come, the better. Because what Module 3 does, it empowers you from an intraday trading perspective, essentially. But I'm moving forward to the automation process of 365 next year. And what I'm looking at is, can I slowly start to create trades that can predict a future pricing in of a shift, right? So market sentiment is tricky because today you could be up, tomorrow it's down. Today you're risk on, tomorrow you're risk off. But because I fundamentally believe there is nothing random in the markets, I want to see if I can actually create a pattern around sentiment analysis. So for example, I'm very positive that NZD is going to get a very strong push in the month of August. I'm absolutely confident that the RZB, Reserve Bank of New Zealand, is going to increase interest rates. This is just from like a research perspective. And then I noticed as I was thinking around this stuff that it's going to happen sometime in August. So if I can do this, let's click next week. Somewhere in the month of August, the Reserve Bank Governor of New Zealand dollar is going to sit down, right? What's going on here? Apply settings. I'm just quickly checking the economic calendar. I'm just walking you guys through, you know, the walls of my mind, really. What's going on? Why? Oh, okay, it's just important news only. All right. Then the other week. Then the next week from here will be the 14th to the, I don't know, the week of the 16th, maybe that week to the 31st. Let's just do that because then it'll just take forever to find. Right, there we go. You see that on the 18th of August this month, NZD. Yeah, I'm always right on that one. There's going to be monetary policy statement, another, RBZ statement, then a press conference. It's like the equivalent of the FOMC, what the FOMC did to the New Zealand dollar, right? So this is a big deal. And I'm pretty sure somewhere here, they are going to increase their rates. I can almost, yeah, I can almost put some money that they're going to do that. Now, if they do that, this thing is going to become very strong. All right, NZD is going to pump, which means on the other side of things, for monetary policy divergence, the dollar will have to maintain being weak in the future. See what I'm doing? I'm trying to price in moves, right? But I haven't worked that out to a perfect supply and demand science yet. So let it not confuse you. You just keep trading what I've shown you until I've mastered this fifth loop, and I'll teach it to you, right? But because of that, right, I want to see when would be the perfect time to get in that. So can I take an early buy now, get in the NZDUSD at this absolute lowest, and then because the markets are going to start pricing in that event, maybe a week before or 2 weeks before in August, right? And today is the 1st of August, so there's 17 days. So anytime soon, the markets might actually start to price in that, in a particular big banking structure event, right? The banks will start to load orders now. So I was looking at this structure on the H4 timeframe. We've already done the top-down analysis, and I think we'd all agree that there's still room for NZDUSD to fall. From a governing perspective, I think we'd agree, if I've taught you, that price has to at least get to this gray box here. See this gray box? That will be the big governing demand. But on the H4 timeframe, I am slowly contradicting that. So I don't want anyone to take this trade or take it at your own risk, or I'm not your financial advisor, blah, 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 because I want to see, there's the gray box there from the governing perspective. Right, and I'm saying, yeah, I see that, and I understand why markets need to just get down there and buy. And if markets get down there and what I'm working on doesn't work, I'll be buying down there anyways with you. But on Friday, I sent you guys this thing, and I said, look, man, the bank elected to raise rates, right? So bullish NZD on the way in the long term, weeks to months. So from 2 weeks into the months. Remember, I spent last war room trying to teach you guys this is time structure. When I say this guys a short-term trade, hours to weeks, mid-term trade, days to weeks, long-term, weeks to months, and then very, very long-term, months to years. And then I noticed that inside the structure, there've been a couple of fake outs, right? There's been this fake out here. there's been minimum stop loss hunting, and then there was definitely a fake out there, right? So markets break out of a channel just to come back in and drop out, right? They're basically looking for retail traders, but eventually they might actually lead to the upside, right? And I'm just looking at this, this ascending channel, and I'm wondering what's going to happen. Then I looked at the 1 hour time frame. So this could work two ways. Number one, I am currently inside a short-term trade. And I'm currently in tiny profits because I took this 1 hour buy. But I told you all of this on Friday. So no one can say I'm keeping this to myself. This is all in the public Telegram group. I sent you all this chart stuff, all these signals. I sent you all my charts, just dumped them there. And I wrote 1 hour demand area of interest, right? And then I set a pending order and I went out on Friday. And I noticed at the end of the day, that it was one of the trades that was still running. Then I closed a few because we did do a bit of news trading on Friday, or at least not news trading, but we took advantage of that dovish tone, right? So prices hit here. Now, I'm not convinced this is going to run forever. And the reason for that is the supply is still strong, it's dropping price down. But if they do decide to start pricing in, a potential, very strong NZD, right? We've got these options here, right? So we've got the 50% where prices, jumping off from, or then we've got this basic turning point, right? Supply and demand number 5, where markets could use this as a retracement, right? And start to go up, right? In the big picture, NZDUSD, AUDUSD, Euro USD, Pound USD, all those structures have broken long-term bearish terms. If you look at them on the monthly time frames, so they should be looking to pump up, right? So in full transparency, I did take the trade like I told you guys, but I'm not comfortable with it, right? So if I'm wrong, I'm wrong. I just want to show it to you on the live account because I was laughing. I'm still not feeling 100%, so I will be coughing. I do apologize for that, right? So if you can see, right, so this got triggered on Friday. Let me just go to H4 time frame, right? So it's the same thing. So that on the live account is kind of like, weird, and I took it on the 1 hour area, right? So I mean, if I take an L here, it's minus $53. It's not bad for my portfolio. It is quite a risky trade in my humble opinion, and this could close. But by the end of the Asian session Monday morning, right, I could be stopped out of the trade. But I'm just testing this stuff for us. But if I go to smaller time frames, 5 minutes, you can see that I got enough accumulation of this area, right? So it's very important that you understand what I mean by accumulation, right? So markets, okay, let's go back to 1 hour and let's draw a couple of supplies. Because I want you to see what I mean when I say these are the kind of things I look for, right? So there's I guess you could call that a supply. I'm talking about this turn here. Right, and if not, we've got one somewhere there, right, and that looks very pretty, right? But in any case, any of these turning points would suffice to say there was once upon a time a supply. Now, the bigger point about these supplies that I'm trying to bring to your attention, and I have to make it big, right? So yeah, it's not the strongest, but it's there, right? The bigger point is this demand took this out, removed the supply, right? So now for me to trust what's happening, right, I want to see price accumulate a big enough position. I don't want to see price coming straight down on this 5 minutes charts and whatever. I want to see, a consistency of, zigzag, high. So this annoys me. And the fact that price ended up falling flat here, right, that retail traders just got too excited and just started to dump after smart money and moved, annoys me a bit, because what I would have wanted from this level was for price to hit the bottom of this downward trend line and go all the way up there, and then for price to then come back and then maybe trigger, right? So I'm being triggered at the end of a joke, right? Can you see? And why have I deleted everything? I'm being triggered, right, slightly, right, because of the failings of this last party. There's just too much rush selling into an area of value, and you can see that automated arrow there shows you exactly where I took the trade, right? So that's where I put my buy. It just tells you everything. You gotta love this. It tells you everything. It's very good to review your trades. And now, so now this is me now not wanting to lose $50, praying that a tiny 5 minute demand like this holds the trade. But if it does, right? If that 5-minute demand does at midnight tonight, then I have a lot of ground to cover on this trade, right? First of all, price is to contend with the fact that it hasn't been here at least 3 times. So it could come there. And if it does, I might not to take a loss, right? To protect my win rate, I might break even or actually exit, because I'm pretty sure this will happen, and second time around it will break, right? And then I'll have to deal with the negatives. And then price eventually, if the projection is right and the pricing of structure is right, this will happen. So the question now is, does this happen now, like from here, like that? Will that, because if that was the case, that would be lovely, right? If that could be the outcome of the Asian session, the London session at 9 a.m. tomorrow, and the New York session, that would be great. But this is an NZDUSD pair. So the contingency of all of this playing out is if I get continued dollar weakness, right? So the only way NZD can pump up is if dollar starts to drop again. If dollar keeps going back up, NZD has to fall, right? So then the whole game changes, right? So at least I'm gonna go to sleep. I'm not a crazy person. I'm not gonna stay up to monitor 50 bucks. But if it was a big account, I'd wait for markets to open. But since it's not a big amount on the line, I'll go to sleep. And on the London session tomorrow, when I start to prepare at 7 a.m., I'll then make a decision. If I'm not yet stopped out, I'll then adjust my stop loss. I don't want to make it too low. Okay, I can't move it because markets are closed. I just want to see how much, because that would cost me $200 now if I move it that low, right? So I'll just leave it as it is until we see what happens, right? But on this 1 hour time frame, there's not a lot of, accumulation, but at least I can see it on the 5-minute chart, right? So that's the trade I'm in right now on this account. It's nothing big, but it's just an idea. Can I start to price in the future? I'm using supply and demand, and I think there is a way. It just needs a lot of money because I have to actually back test it with live accounts and take hits where I take them. But essentially, I think I've built enough capital for an account to mess around with this concept, right? But this is something that you guys should be looking out for. NZD is going to be strong. Please remember, if they get the push, if the governor changes and goes on interest hikes, you're going to get those 16 June levels on NZD charts, right? So just start to look at that. Start to really focus on that. Right, we spent a lot of time talking today. People are going to be like, we didn't get a lot of signals today, Chief. You're just yapping. Swiss franc JPY, another chart I looked at before you guys came through. What's going on here? Right, there we go. Right, let's find another broker where I don't have too many notes, see the big picture, and then we can go down to the analytics, right? So this is actually an interesting trade because this was in our financial stock notes, Forex notes, sorry. The signal document that I put out, this is the trade. And the reason why I was reminded about it was because I got an alert on Friday night to potentially take profits. And I had forgotten that I told you guys to buy this asset a long time ago. And so most of you, if you're swing traders, it's time for us to come out. But I'm pretty sure most of you have not been in this trade, right? But on a governing structure, price has arrived at a dangerous area to hold any type of buys. I agree that my alert, I just use alert, right? Alerts are simple, man. If you got a TradeView Pro account, just put a line there and you just add an alert, right? And then you just link it to your phone, and Trade will be like alert, and you tell yourself what you want. You tell yourself notify on the app, send an email. It just depends on the type of trade you have. But then I wrote here, take profits, Leroy, right? So you just write a message to yourself, because again, for me, markets are not random. I can read the structure, I can hold the trades. If I'm disciplined enough, I will average out in good profits after every financial quarter. If, let's say, you're not at that stage of your trading where you're trying to be competitive and you don't wanna lose less, you wanna have a high win rate, blah blah blah, and all you care about is, can you keep $1? All you care about is, I wanna make money. I understand I'll lose money here and there. With good risk management, I'm fine. If that's where you are, which is where all retail traders need to start. Your job is not to be perfect in the market. Your job is to be mechanical. Being mechanical is rule-based. If that's your job, I'll show you now. I'll show you now what I mean. I have this open for you. So this is our remote course. For those of you who want to join the course, I give you access to this stuff, and then you get free access the next time I teach live, right? I'll be teaching live on the 9th of August, by the way. But everything is in here. If you go through this remote course and you check the financial notes I sent to you guys, which one is it now? I'm going to go with notes 1 in March 2023. Yes, because that will be 3 months that I've been holding. Actually, it's a quarter, March to June. Yeah, I'm correct. Everyone has access to this because it was dumped on the public Telegram group. They see that Swiss franc JPY buy. I still carry a strong bias in this asset. I've located 2 good areas, blah, blah, blah. I explain it to you. When I say buy 170 pips, but poor risk reward. And the reason for that was at that time in March, if one wanted to exit, if they didn't want to swing trade, they were going to exit here. All right. So that's not bad. If you look at the pips though, that's not bad. But in terms of risk to reward, you might want more. We like more, right? But that's only if you're taking this whole chunk. If you're taking buy 1 on H4, that's what I said, right? So this is Swiss franc JPY. Now look at what's happened now. Because I saw this on the corporate accounts, like, oh, okay, cool, I'm still on this thing, but it is time to exit. So don't buy. I don't want you guys to be confused. I'm telling you this story because I'd forgotten about this trade. These are the same charts, the same notes I used, and I told you to buy on the H4 time frame and daily time frame. I wrote H4 daily, I think. There you go, entry point, daily or H4. I wrote this, and there's a lesson here, 365 traders. I want you to catch this up. That why I always tell people, don't worry about what other people are doing. Start on the daily. The daily does this beautiful thing of swallowing all the noise in the small time frame. Because if you look careful on the daily, right, I drew it this way because I didn't like the fact that this candle was a non-starter. It barely had a body, right? So I took the area of competition right at the top of this bullish engulfment, and look at this kiss. Eventually, price came back to what I said. And if you took this trade with me, and this is one of those trades where I still hadn't even broken even. So my stop loss is still exactly where it was supposed to be. And if you look very carefully on this particular trade, and we go to the H4 time frame or those smaller time frames, you will struggle to find confluence sometimes. You will struggle to find an order block that you can align yourself with. Right, so you see on the daily time frame, if you know what you're doing, if I've taught you before, and you're looking for a very specific order block that will allow you to take a safe trade, a safe demand, you're still waiting on the smaller time frames. You are still waiting for this giant, right? There's nothing here on H4, absolutely nothing on the H4 time frame. Right, this is a little bit too high because it's lower than our red area, our area of competition, which means you are somewhere parked here waiting for this action to happen, and it's left you, right? So please, if you're new again to the academy, you draw your areas of value on the daily, you give yourself 5 to 10 pips to draw an area of competition above it, and you just allow price to do what it wants. So there's price. Right, so price left, rallied, broke in of this upward trend line. We understand this is a psychological level, and now I recently got an alert that it's time to get out. Right, so I'm approaching take profit. I normally give myself a 20 pip alert, so my take profit is here, and then I'll give myself an alert to exit there, because I understand that if I'm holding a long-term demand to supply from a monthly to a monthly, right, that the area of competition could turn price against me before I can exit, you know, with all the gains I'll have worked hard for, right? So this is price making its way up this trend line in a very choppy way. But if you look to your left, you can see that here is a bearish, let me just zoom this in for you guys. I've lost the screen with the YouTube chat. Okay, there we go. If you look left, you can see that here there's a bearish engulfing pattern, right? So I need to exit just before that. I don't know what markets are going to do the day markets get up there, which will be very soon, probably sometime this week. I apologize about my dogs. And if you look on the governing structure, we're inside that big supply, right? That big long-term monthly supply, right? So I do think there's going to be a grind higher, but for my trading plan, it's now time for me to get out. I don't want to take a risk and lose all these gains for the last 3 to 4 months, right? And price dips down only for it to go up there. I do think the upward push ends here. So what I'm going to do is sometime this week, Monday, Tuesday, Wednesday, just to see if markets will push up a little bit further. I will close all buys on this trade, number one. Number two, I'll then watch how it plays out inside this yellow area. How long does this bearish engulfment sell for? This is where my TP is. That's why that line is there. Just ignore it, right? I will be watching for that. If markets can hold, so if they can do this, right, aiming for that, and then do that, break this, and then when they come back down, I won't be too scared to try and scale, maybe throw in a bullish Fibonacci to then join price to really go all the way up again. But I don't want to lose these gains. Right? I don't want to take a risk now after holding for so long and lose these gains, because again, all supply and demands are equal. That means if we're in bearish territory, be respected. Know that it has the potential to remove your area of value, right? So buy two never happened. Markets never got low enough. It took a fresh touch on that daily area and just took off, right? Very, very clean MTA. Everyone was in the remote course, had access to this. Everyone, I did share it on the public Telegram group. So it's just nice to see a good plan. And these signals, I'm putting them together. I already started creating a plan. I normally do my plans on Mondays because I'm free. I take the day off on Monday. So you guys are going to get the latest plan of where I'll be staking, you know, some of my money moving forward, right? So that's the opportunity, or at least review. There's a potential sell coming. I'm not so sure if I'm going to take it. I'll let you know my final mind, right, on Monday if I'm going to take the sell. If you do take the sell, you'll be prepared for it to be a very short one, right? Very, very short one. It might not even be worth it, right? But yeah, okay, yeah, it's good money. It's good money. It's about almost 200 pips. Be prepared for a very bad, but for you to get 200 pips, you at least need to be willing to risk about 65 pips, which is still an okay risk to reward ratio. I think so. 6, 12, 18, or very close to 1:3, right? In this particular situation here. And if you're lucky and markets extend all the way down, even better, because this is a monthly supply, right? So we could get a complete reversal before going back up to that true sell, right? So watch out for that. But I've got that noted down. The second last chart I looked at without you guys, which is nice because some of these charts are the NZD pairs that I said we need to look into. Bearing in mind what I said about NZDUSD is the fact that this thing is falling, right? So I've already marked up some plays here. So let's first look at the big picture, and then we'll come back to my trading plan on this chart. And I've noticed it helps me a lot if I can actually look at a couple of like one pair. So I look at all the NZD pairs today before the war room. So maybe when I waste time talking, I already mapped out some, so you guys leave with something, because I know some people say I talk too much, because they want to learn how to become wealthy in 5 minutes. Yeah, right. So look, man, classic, clean, you know, New Zealand Kiwi versus safe haven Swiss franc. You know, markets are falling just like NZDUSD or AUD, or, you know, it's the same story across the board. Sensitive risk assets are removing or have removed their long-term bearish structures since 2015 when this one started. All right, and if you draw a much more holistic one and you're trying to get, you know, trend lines to touch, you're going to get something ugly like that, right? But it's there. Point is, markets have broken out of this structure, but that now could be a fake out if you draw it like that. So when I use the 2015 one, remembering trend lines are extremely subjective. These are not, it's not a magnet. It doesn't pull markets in any direction. It's to help you with your analysis. At the end of the day, you should be able to make a good decision with a good trading system. I highly recommend supply and demand. I have no time to debate about other trading strategies. Just know I've been doing this for 8 years and I've tried almost everything under the sun. I've spent lots of money looking at different ways to trade sustainably. All right, and I'm not leaving supply and demand for a very long time, if at all, ever. Right? If you understand capitalism, you understand macroeconomics, you understand orthodoxic economics, you understand that price has always been determined by supply and demand. So I'm not here to debate about trading strategies. If it's working for you, you don't even need to worry about trying to convince me. I'm very ignorant in that field. I've lost too much money in my life trying other things, right? So this is a situation that I see here on NZD Swiss franc, the big picture, right? The markets are twisting and turning. Normally when this is done, when a bearish structure is removed or a bullish structure, but in this case, a bearish structure has been removed. When this has happened, to price, I tend to think about all these supplies that were inside on the other side as retracement creators, not market reversal areas, right? So sometimes I don't even expect to see some downside, but I'm happy because you can see that price pumped up, broke a trend line, but never got a chance to retrace it, right? Never got a chance to retrace it. So this downside will allow for that. Now, when we look carefully here, I don't trust this area here. This could be called a bullish engulfing pattern, but it's just I just don't trust it at all. I don't like this, but I'll trust it a bit better, right? So what I'm going to do is I'm going to see if I can find some type of confluence on the weekly. And if you see on the weekly there, it's still scratchy. The way it's coming down, very choppy. Every 1 week down, 1 week up, 1 week down, or 2 weeks up, 1 week down, 1 week up, 1 week down, 2 weeks down, 1 week up. This pattern is annoying, right? Because your psychology is going to be played with for a long-term swing, short-term swing, intraday trade. You're gonna have to work a lot on your psychology. The next time price seems to be unbothered, is somewhere down here. Yeah, there could be action there. But I don't want to be part of that car accident, right? If I go back to my governor, you'll notice that this is what we're looking at, right? That area that I just drew right now, right? So it's because of that, I'm going to wait. I'm going to wait to buy QE. There is a high chance because of how lean this structure is that markets will eventually touch this trend line outside of an order block. So just be very careful of that. Right, and that's not an accurate measure. I'm just saying there's a high chance, right? It could even touch here. It could drop straight like that, right? Where price will start to you have to start to negotiate around these areas where markets the previous highs where markets bounced off. If we go to the weekly, on weekly we go to daily, right? So now I need to clean up the chart because I can see what I was looking for. So you can see there was the high of 18 September, 21 September 2020 is a potential place for a retail trader to start to buy from. I wouldn't buy there because I never buy at the top of resistance or supports or whatever. I would be more looking for price to push a little bit lower, right, to this daily demand, which is sitting on top of that weekly area. Bearing in mind that I'm completely, out of instinct, right? No real justification to give. But out of instinct, I am simply ignoring all of this nonsense here, which could be enough to turn price, by the way. There must be some type of demands in it to turn price. The reason why I'm ignoring them, there's a question on the Zoom chat. Yeah, Samuel, it's part of the list. Someone on YouTube asked him to look at pound USD as well. Definitely gonna go there. I'm just finishing the ones that I mapped out in preparation, right? So the reason why I don't care about this area is because that didn't work, number one. That didn't work now, because you see, when a channel is broken, it's broken, number two, and then that might not work, number three, right? So markets are just melting down as they should. The governor is pushing price down. Oh no, it was actually Lucky Samuel who asked us to look at pound USD on the Zoom chat. Sorry, I just looked at the list of trades that to look at, yeah, but it's definitely on the list. Right, so because of that, I'm going to wait for this to continue. I don't like where price is right now. And let me show you now in my actual trading plan on the chart. Right. Today's my first day being allowed to drink what I want in this house. I'm back to drinking fizzy drinks. Apparently they're bad for you when your throat is sore. Sugar things are not good for you. Yes, man. I've got my partner, my mother-in-law, and my sister-in-law all here. And they all had their own concoctions to give me when I was sick. And I appreciate all of them. They literally brought me from the dead. But yes, there are just so many rules. I've never drank garlic in my life like that before. It was nasty, man. Anyway, so look, This is what the chart looks like to me on the daily time frame, right? So I'm seeing this. I'm seeing this bullish structure, that the one that I said I don't see any strong demands in there. I see it being completely removed. I see a break in market structure. It could have been this dip there, break in market structure, but this was the first break in market structure. So I understand that we're definitely selling. I can see that markets are removing all buyer intent, right? And I'm going to respect that, right? When markets broke market structure, markets came back to retest my trend line, and then markets dropped even lower, creating a lower low. You can see that markets then came back here to retest what was a very hazy supply, but created a stronger one. Bearish engulfing candle, creating a lower low. And when markets came to retest it, markets have slumped down big, creating a lower low before the close of last week, right? So the money right now is with the sellers. Now, if you zoom in a bit, you also notice that we've got a continuation pattern being formed, which is annoying to me because I wish I was in the sell. I honestly do. I don't know why I missed it. I don't remember if we spoke about it last time and we didn't get through it or whatever. It was not in my trading plan. I didn't write it down. Important things to write things down, right? But we've got another situation here. On Friday, we ended off with the bearish engulfing pattern. That's what happened on Friday, right? So we are low. We are low in the curve. When we talk about supply and demand curves, it's a place where we start to situate where is the best time to sell. And this is not the best time to sell, right? If we draw a supply and demand curve, which is stuff we talk about in our module 2 of the course, you will note that your curve, if you draw the latest leg, right? The latest leg starts all the way up here. Now, if I start drawing legs all the way up here, I might have to stop somewhere down there, or this demand on the weekly area. You'll note that this is definitely after the 50% mark of a supply and demand curve. You know what I'm talking about, right? It's inside the online course. If you just started the course, don't worry. I cover all this stuff. Everything is in there for you, right? You'll get there, right? So in module 2 anyways, it's in there for you, right? So I am happy to take a trade. It's going to be a tight trade. And I'm gonna risk very little of the account for this, because this is like a 40 pip area of value. So this is not a type of trade that I would recommend and say this is an A-class trade, right? We're very much low on the curve, but I still believe we still have to move. We have ways to go. So it'd be nice if markets tomorrow continued down, right? And then eventually at some point came back and then would sell. That would be nice. But I'm also open to the idea of markets from Monday and Tuesday literally just coming in for the dump, right? I'm open to that. So I might be looking to add a little bit of moolah here, just a little bit of chilete there, make it nice and tight. That's the daily. And then maybe if you want to get like a clean, area of value, then you're looking at, these H4 areas, right? So break of market structure is somewhere there. Right, dip. Markets could rally all the way up here. I don't see it happening. I see them maybe stopping there, but in any case, your stop loss must account for this H4 area. So there are too many lines. Let's do that again. So if you take this trade, which is again a very risky trade because we are so low in the supply and demand curve, but if you take the trade, you're looking at risking this as an area of value, if that makes sense now. Right, whether you take it on daily or whatever. So this is here as your stop loss, and then you can enter anywhere there if you want to swallow the whole thing, right? And now that scenario that I played out makes a whole lot more sense on the H4 time frame if you really look at it carefully. But let's just see how big this area of value is. I'm hoping it's less than 50 pips. For a swing trader, that's fine. If my risk reward ratio is like 200 pips, I'm okay with that. All right, it's 42. So I'm happy with that. But again, we are low on the curve. Remember, the goal of selling is to sell as high as possible. But I don't know if price is going to get any higher. Right? So you're looking at a movement like this and then a drop. I'll be in the sell personally. If it dings, it dings. I have no problem with that. And I'm just selling now, riding that wave, right? Watching carefully how markets feel about NZD. Because don't forget, very soon on the 18th, NZD's plans must change. So NZD versus the last final safe haven. This is the final situation there. Just a beautiful clean chart, right? Clean, right? Markets got to a supply, again, a supply inside a broken bearish structure. You know, you see, you start to see the pattern, you start to realize that markets, China 50, man, I'm actually doing a full study on this, on the Chinese market, because China 50 has done, I'm talking to Mr. Edwin, who's asked me to look at that on the YouTube channel there. China 50 has done something completely new, right? Breaking a monthly supply. I still think they're going to go up. I told you guys that if you're in the private Telegram group for the live classes, I told you guys on the watch out for the 3rd of August. I can't remember what I said, the 1st and the 3rd of August. Watch out for that, you know, massive, you know, printout, right? Watch out for that stuff. Today is the 1st. So watch it this week. This is the most decisive week for the Chinese stock market. But that thing has been on a beautiful discount. And I am creating a little bit of content around the Chinese stock market, because a lot of people only know NASDAQ, Dow 30, Dow 50, US markets, and miss out on good opportunity there. Right, so NZDJPY, but I'll look at the chart for you, Mr. Edwin, before we end. NZDJPY is dropping from a supply, and there's nothing really to waste time about. That's potentially a retest on smaller time frames of that bearish engulfing pattern. Markets have been just choppily, steadily coming down. These two white lines represent a 61.8% retracement for a bullish Fibonacci, right? So let me just draw the Fibonacci so you can see what I did, so you don't just take my word for it, right? So if I do swing low, swing high, the way I taught you, there it is. There's your golden ratio. So it's from this white line, your golden ratio, all the way down there. So I've noted that on my chart, and I'm definitely buying. I'm definitely buying. But the order block is down here. But if you look at where your complicated 365 candles end, right, it makes sense. So just try and catch it there with a clean MTA. The only problem with this is somewhere here on the square there is a daily demand. You know, there's just something. There's always something, you know, ready to mess up a beautiful plan, right? Look at that. So there's this here on the weekly, right, which I'm hoping price just burns through and ignores and drops lower. And then there's this on the daily. Right, so this is the one I said about on the weekly. So if you see it, you know, look, it was used perfectly for a fresh touch, right? So it has, but the order, excuse me, the order block is quite strong. Order block is quite strong. If we're being honest, and we draw it like that without having to extend it so much on the daily, and then there's a potential for that to replay. And it'll literally, that white line is that golden ratio, right? So we can't ignore that. And then inside a little bit better, a better buy low is here. I won't lie, I would far much more feel 10 times more comfortable buying up there, the down here, sorry, down there. I would very much love that, because the distance between immediate area one and the actual better buy low is almost 200 pips. So it's not something that a retail trader can easily swallow. Can't swallow both areas of value, right? It's dangerous. And the next buying opportunity, of course, is really low. That's the key, right? You want to keep a nice, neatly tucked, right? So obviously this is dramatic. You could go for that, but just in case, I'll do something like that. But then again, that's 200 pips. But this is the kind of area that I'd hold. I don't know how big it is. I'm lying. How big is it? Yeah, it's about 200 pips. It's kind of area I'd hold. 150 pips, actually, even better. I would hold for a gigantic swing, right? So if I'm risking 200 pips, give me 1,000 back, right? So this is the type of buy you buy because price is now really set, and it's the order block, that actually removes this very structure and sets price up there. So I'll be looking at these three areas. As time gets closer, we're nowhere close to that right now. So we've got enough time to really think about this area carefully. But yeah, that's what I'm looking at the NZDJPY. It will all depend on what happens on the 18th of August, how markets accumulate very carefully to these positions. Right, there might be some rush selling very soon. If if markets pricing strong interest rates, watch the sell happen a little bit faster because they just want to buy. They just want to buy as quickly as possible, and they know they can only buy at one specific place. I will say the bearish trend line ends here. So this area might push price up. So let me give you an example. When you find demands at the end of a structure that's been removed, they absolutely work for a while. You understand what I'm saying? Let me just zoom in here a bit. Right, and because of that, I don't take them because I don't want to be part of the for a while story, right? So it's like Yeah, you can't say we didn't work because we did our job. We were in demand. We did push price up. Yes, you did. You pushed price up here. Boom, perfect. And then you got broken, right? So if you try to buy again, or if this was your first time buying, your stop loss got hit, right? It's a waste of time. And then markets went up, but then now markets are coming back down. And we know that once they do that, there's nothing there. There's no money there to hold the bar, right? So because of that, I'm very worried about demands inside structures that have been removed, or supplies inside structures that have been removed. You guys have been awesome, man. Awesome. Everyone on the Zoom and on the Facebook Live. Not so sure. So you guys have to explain to me why you also want the Zoom open. But yeah, each to their own, I guess. All right, so now let's look at charts that you guys have asked for. I've got USD, CAD, gold, silver, and China 50, and then pound USD. All right, so let's start with pound USD because I think we're at some place. Pound USD is going to look the same as Euro USD, right? Because when that dollar strengthened, whoopa, did that thing not fall a little bit? Just a little, right? And I sent this chart to you guys on the war room on Friday. You guys remember this? Literally on the public Telegram group. I said, look, man, this was before the news came out. This was before 2:30 p.m. This is so nice. It's so nice for you guys to see the actual potential that exists in your trading, to a point where you can comfortably say, you don't really care what the news is going to say. You understand what markets are going to do. You get in on time. I circle these things for you, right? First supply, they held. Second supply, then I say, this is a golden fib area, all right? So because of that, watch out for it. What time did the news drop? 2 p.m. Let's go to the 1 hour time frame. I think the news dropped at 2:30 South African time. My charts are linked to South African time. I dropped this to you guys around 11. So this is what you guys were looking at on the charts. If you go back to the public Telegram group, depending on what time frame I shared this to you, if I go to H4, it looked like this, right? It looked exactly like this. And people are asking me if it's positive, it's negative, well, what is it going to mean? And there it is there. Bearish fib, bearish fib. At 11 a.m., I was actually convinced what the plan was. There we go. And then, markets dropped, like naturally dropped. Euro USD did the same thing, didn't even get to like a significant fib level, right? So it's gotten a run for its money. But let's just remind each other what the actual positioning is of the pound, right? Let's quickly remind each other. Oh, come on, man. I'm trying to get to a different broker without my notes so that you guys can see the big picture. Right, there we go. So I've got Saxo here. What's this? Oh, yeah, and I think I taught on this. This is a previous one. Now this is the other Sunday. Guys, you guys have, guys. I told you this stuff. I told you it's last week Sunday. I just remembered. I used Saxo, right? So because I thought I was in the trade by myself. I remember I told you guys on Friday, but even before Friday, the Sunday before Friday, we did this together. I said, I don't like this area here. Markets might have and break it, so only risk a little bit. I'm going to put 2%. And I told you, wow, I put 3% here. And there we go. We've dropped a bit now, right? So now it's just a situation of the maintenance of dollar strength. If dollar strength continues, all of this is ours. If dollar strength continues, right, so remember I started off with the DXY chart at the beginning. If that chart keeps going up to that area where I want to sell on DXY, right, then all this green is ours. What I would advise you to do, is still too early. I want to advise you guys to break even, but unfortunately, breaking even is good, but sometimes it's bad because it kicks you out and you lose your area of competition. So the rules for breaking even is you must get adequate structure. So our entry point, right? If you entered where I told you to enter, our entry point is still inside a fresh order block. And what that means is, what could happen is on the intraday time frame, on the New York session, on the London session, which is very notorious, the London session wants to sell. Let me tell you something. If 9 a.m. tomorrow, Monday, the day traders, those guys want to do my module, the day traders, if they want to sell, they will spend the first 4 hours of the damn London session pumping price up, kicking everyone out. So you sold early on Friday, smart. But now the banks are like, whoa, let's get that money for ourselves, right? We're still in the trade right now. And the problem is, if you look careful on your 1 hour time frame, they're tricks and bobs, right? It's too early. It's too early. You can't assume that they're gonna react to this PCP right now, right? It's not even a PCP. I'll zoom in and talk to that area there now. But what I want you to get is the London session, the 9 a.m. South African time, 10 a.m. in Kenya, 8 a.m. in Nigeria. Where else do I have students? South Africa, Zimbabwe, Zambia, Lesotho, Swaziland. It's 9 a.m. for the rest of us. Hong Kong students, I've forgotten, man. You guys are like 4 hours ahead or something like that. But anyway, the London session is notorious for first creating the highs of the days or the lows of the days. Do you understand? So if they want to sell on the London, or if tomorrow is a selling day for pound USD, be careful. They will first push price up because they're creating that wick that we're going to see on the daily time frame 3 days from now, the high of the day, before the body drops. And that can be very violent. In fact, I'm still not yet sure I like trading at the openings of markets. I like to watch. Oh, I like to watch. Everyone knows, don't disturb me for 3 hours during the London session. Sometimes I get in around 11 when they're done, because what they'll do is they'll break structure, break, and then come all the way up here. And then when they're done, they look left, they look right. There's no retail traders in sight. They start to create bearish engulfing patterns. And then all of a sudden, you go outside, you go to town, you go have tea, you go have lunch, you go shopping. When you come back at 5 p.m. at the end of the day, markets are all the way this low. They are, you started selling here, markets kicked you out, hit a stop loss. Now you're like, I thought it was a sell, but it's a buy. At the end of the day, you check, big red H4 candles dominated throughout the whole day. So your idea of selling was correct, but your ability to read the competition was off. Because intraday institutional traders are the most savage traders on the planet. These guys have to pocket percentage gains on a day-to-day basis. It's the most competitive time to trade. All right. So if I'm going to sell and markets have dropped on Friday like they have for us, as much as it's nice to lock so you know you're not going to lose, the point is not to not lose. The point is to make money. All right. So I'm going to play this at my 3% risk for now. Leave the stop loss where it is, because I suspect they might use this as breathing room. The only thing that gives me comfort that they might not is the fact that they then gave us a similar strongish, selling signal here. But even that is not as convincing as you'd want it to be. All right, so I'm not as convinced. This is not as convincing. But what we can do now is start to assimilate some Fibonacci's on this chart here. So from there to there, and you can see, you see that there, you see where your golden ratio is. You see that there. Now, best believe you will suffer if you break even too early, or you might suffer if you sell here. If you're part of the stop loss gang, I would wait for this. I would wait for you. So if you didn't enter with me on Friday, don't know why you wouldn't trust me, right? Then this is a potential good entry point. There's a potential area here, market structure is broken, right? So price can come back, something like that, and then have a stop loss wide enough, because this is also allowed. This is also allowed, right? I would, and again, this is also contingent on dollar strength. So we need DXY to keep shining, shine bright where you are, Mr. DXY, go all the way to that supply that I pointed to you guys, and then when price drops, we can then get out of this. But for now, potentially it's just a slightly more downfall for pound USD, right? Pound USD nailed, right? It's 6:30, guys. For those of you who want to leave, thank you so much for joining me. I still have a couple of charts that people asked me to look at, so I'm going to do that so those people can stick around. But if you have to go cook and prepare for the week, appreciate you guys so much. I'm supposed to take a walk now with my dogs and my partner, but I'm sure in 15 minutes time we will be done. USDCAD was the next request, I think, from Alex. Alex, I think it's you, but I need to add you to our private group. I know you joined the remote course, but you'll get a lot of benefit if you're with the private group as well. So something I should do tomorrow. Just remind me if I haven't done it. Anyone who's joined the remote course recently and is not yet in the private Telegram group, please do, because I've got a lot of announcements to make for the changes in the academy from September, and some of them will start in August. So it'd be nice to have everyone in one place so I can talk to people at once. Right, so this is what I see on USD CAD. You'll remember this CAD, anything CAD, you think oil. CAD oil, CAD oil, CAD oil. And so this is how it's been, right? So USD CAD gave us the longest, biggest, beautiful downward motion, since COVID. It was the best sell ever, right? Or for some people, the best market crash ever. It just depends how you view it. Interesting. I have my doubts that markets will make it all the way up there. I have my doubts. I have my doubts at all that markets will be looking at these PCP levels, especially this one. Especially this one. Markets will be looking at these PCP levels, especially this one. And I'll tell you why. Number one, we anticipate oil is going to get a big rally sometime this year. Oil has broken a governing demand, right? Supply. Right, so oil is going for that $100 per barrel. If oil is strong, CAD is strong. That's the relationship. These two things go together. If CAD is strong, dollar falls. Right? So there was a strong rally against the CAD here. The dollar FOMC level, 16th of June. You can see there, FOMC pullback area. If I go to weekly, it's this area down here. This is that FOMC level on the charts on every single dollar pair I've marked it, right? Because I want to know. Somewhere here is that FOMC 14 June, 15 June. This is on the weekly time frame. If you go to the day, maybe I should be more specific because we're going to be like, he didn't show us properly. Right, so 16th of June looks like this, 14, 15, 16, right? This big, strong rally. That's the FOMC pullback area that I've marked out on this chart. Right, so that's the only thing I'm worried about on this chart. But if you go back again from the very bottom of the whole thing, markets are if this supply doesn't hold, right, which for now, I don't see why not, because oil is currently retracing, CAD pairs are retracing, right? Everything's retracing for a big long-term push up. Like long-term, remember, is technically months to years, right? So there's going to be a long-term push. But right now, during the retracement, dollar is enjoying that CAD weakness. So markets ready into a supply and they're falling. And it's a governing supply. This one here by itself is a governing supply. It's a PCP area. But if it doesn't hold, it still has to account for all of this. There's still more problems up here. All right. So I'm not even too worried about price ever getting back there anytime soon. And in this area, if you think about it, fresh touch, retest, right? Weak. So then we're now looking at, some movement downside. If this was to break long-term, don't get confused. This is not the trade for the day. The trade for the day in the short term is what our market's doing now, right? So dollar is strong right now. So CAD is falling. Now that's hours to days. In the moment since Friday, when DXY hit a daily demand, dollar is strong, CAD is to fall. That's what's happening. If you look on your weekly time frame, CAD had arrived at some type of very choppy, very ugly, very difficult to read supplies, but we can figure them out because we're smart. What we can do is we can draw, we can use volume-based candlesticks to brighten that. You see that there? You see where I put my line? Because we're smart. We're very smart. Right, so we can do something like that. And then when we do something like that, remember these are not order blocks. They're just letting us know where the volume is. Right, you can see now, like, okay, that makes sense. It does make sense, right? Because we know that, right? So there's some action there because all of these other areas of value are useless to draw now because they were broken. This was broken, going up, this was broken. Remove the wrong one. I'm trying to remove this one. Right, that was broken. Right, so this is what's left. And if we really think about it, we can actually extend this like that. And then we'll see if it makes sense in terms of order blocks, right? So right now, it makes sense in terms of volume, but does it make sense in terms of order blocks? It does. It does. And that is actually a bearish engulfing pattern, which I actually couldn't see before because it was very choppy. So now if I tighten my area of competition, look at that. And then I remove this. I don't know whether it's from the monthly, right? I'm clean. I've just got a clean chart now. Right. So there is my supply that's in charge, right? PCP supply creates a bearish engulfing pattern. There's my fresh touch flag pattern into it, hits it, drops. Here's my second touch, like a kiss. It's like a peck, right? The most romantic thing in the chart is when markets come to our areas of value and pick them, right? So I can't really tell you why I'm not in this trade. I honestly have no idea why I didn't take the trade, why I didn't plan for it. Right now, I'm not in any USDCAD, which is actually quite annoying because this was a clean sell, right? Just a clean ba-boom, ba-boom on the daily time frame. We arrive, we leave, we take, we sell. Price arrived, there it is there. That will now become the immediate in the short term, hours to days. There's your bearish engulfing pattern. So we might have another play here in future, right? Markets have not yet arrived there. Right? Never be tricked. Take your time with the stuff. And markets are dropping. Now, I'm obsessed with breaking of market structure because then I know the bank's plan, right? So let's see what we have here. We've got this, and then we've got that. And then we've got this, kinda, then we've got that. And then we've got this, right? So we've got two higher highs and, you know, blah, 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 lower lows. And this is it. This is where markets are right now. So if markets were to break this, I mean, I've got a line up there, but let's put it down there. If markets were to break on the other side of this line, just teaching you some cool stuff, man. Understanding that where the governing supply, weekly supply, now we found a daily supply, the pressure is due to the downside, the dollar is strong, it's USDCAD, CAD is weak, dollar is strong, everything is perfectly, you know, confluentially aligned. If markets were to, I dare them to do this, then I'm going to look to shoot maybe here. Right? That's what I'm going to do. I'm going to come wait there and then take a shot. That's what I'm going to do. And look where we're coming back. We're coming back home. I've been waiting to take trades in these areas, right? I've been waiting to take trades in these areas. I think gold is making its way back to these areas. Gold will be the asset to get there first. But FOMC pullback, 16 June areas of value are significant to play, right? So, all right, cool. Thank you, Alex. I see you wrote there, will do. Speaking of which, I've done pound USD, I've done USD CAD. Is anything on the Zoom room that I forgot? Please don't add now. It's time for us to go home. All right, so let's look at gold. Next one was gold, XSU. For the third financial quarter, I can share signals on minerals. I'm just not trading them, right? For the third financial quarter, I'm just focused on my plan. So 25 FX pairs, stuff I do. And I'm trying to get that account up to about 30,000 US dollars. And I've got, today's the first, so I've got 29 days left on the challenge, which is, feel the pressure. I feel the pressure because technically speaking, that's 6,000 US dollars that needs to be raised in 20 trading days. Because remember, our retail traders don't have access to the markets over the weekend. So you only have like Monday to Friday times 4, which is 20 trading days. So tomorrow is a big day one for me of the last leg of the third financial quarter. If you're in South Africa, it's basically raising 90,000 rands in 30 days. 90,000 rands in 30 days. But yeah, it's just it's interesting, it's nice, it's good, whatever. Right. So let's look. Let's remind ourselves about gold. Let's remind ourselves about gold. The first thing I want to do is I see I've removed my notes from this chart, which is unfortunate because I had a lot of notes on gold. So let's redraw them. So the first thing I'm going to do is I'm going to find FOMC. 16th of June is here. Okay, so at least that's why I've got sell. Sell here because there is the FOMC, right? I see on the daily time frame, there's no confluency for that. That's fine. So just in case, let's just draw a proper area of value up there for also an equal sell. But I'm going to take the H4 sell first. I'm pretty sure here in H4, I can find order blocks. I guarantee it, in fact. And then I'm wrong. Yeah, I'm never wrong. Well, I am more. No. edit that out. Sometimes I can be wrong. Everyone is wrong sometimes. Right, so with this consolidation, guys, I spoke about a long time ago about gold. Like we nailed it. We said, look, man, this is gonna continue. And then as soon as my dollar hit a daily supply, as soon as there was dollar weakness, gold performed. When dollar is strong, gold drops, right? There are some things in terms of market correlation that you're going to have to remember. If you're in the remote course, oh, good. Wongi is around. Wongi, I don't have my spreadsheet with all the students' names open. But if you're a recent student of 365 and you did the live classes with me before we closed, we didn't do live intakes in July. Oh, what a beautiful break it was. It wasn't productive. I didn't do what I wanted to do, in the break. But anyways, the last people to sit down with me and do a live course, right? So I can't find the spreadsheet, but anyways, the group that you know yourselves, Mongis and all those other awesome people, it's imperative that when you're going through the remote course, you don't skip this, because I know I've done all of this stuff with you in the live classes, right? So it's easy to go. I don't have to rewatch the videos, which I encourage you to do, because this is a different version of me, the best version of me anyway, so to speak. But I want you to make sure you watch this video. You see this there? Correlations, risk off, risk on. Because I don't think we covered it properly or in great detail in the live classes, right? Correlations, market correlations, right? Currency correlations. Like everyone has access, all students have access. It's just that some of them might not use it, right? But you guys, I know for a fact that I don't remember whether I either fell sick or it was the end of the course. I don't remember doing this with you. That's why the remote course is so important, because I have this beautiful well of all my, yeah. So it's lecture 30, module 2. And in here, I teach you guys how to think through correlations. I show you how to use the FX book, my FX book correlation thing. You need to know this stuff. You need to know that when dollar is strong, gold is weak. But if you can't memorize that stuff, which I don't expect you to, there is a simple market correlations tool to use here, right? But please watch the entire lecture because I pull in sentiment analysis, correlation analysis, all those kind of things. So, and those of you, the first gen group 20, Eunice, and all those amazing people, Mr. Evans, this was a free public lecture, so you might not have attended it because you've already done the course with me. So I'd advise you to also revisit this video if you're a group 20 original student. No, actually, I'm gonna check, David. I don't think so. It's something I need to do. It's not just you. It's everyone else who just finished the live class at remote course. I keep forgetting to do that. Right. So please, guys, lecture 30. And this stuff, priceless. No, I'm not saying all my stuff is good. I'm simply saying I talk a lot about market correlations. Very, very important, right? Very, very important. Right. So please, let's do that. Now, gold was at this interesting place. I'm already down here on the H4 time frame. So maybe let's take a step back before we do that. Let's have a look at the big picture, blah, blah, blah. But you should know by now, gold dropped, hit a demand, went back up, and then traded sideways and wasted everyone's time. Short story. Right. So there's a governing, chart for gold. You can ignore all these lines. I personally don't even remember what they're for. Probably when I'm teaching students, and then I draw lines to show different supplies and demands at work. Here's a tip, pro tip. You want to improve your trading by 100%. You wanna be 10 times better than you are right now in trading. Do the course. Number one, it's not a marketing tip. I don't care if you think it is. Should I do this? Let me just do this real quick. There are 4 staff members around the academy business. 4, right? There are people who arrange my calendar. There are people who arrange a lot of stuff for you guys. And then there are people who do the back end stuff. And I'm paying those people to do the 2 people doing back end stuff for stuff you guys don't even have access to right now. They've been on a payroll for a year. And I haven't even released the full potential of the website yet. All right, 4. When I teach live, I cap it at 10. Most of the times it's 6 to 7 students. Since 2019, you cannot point a single student, because I have my spreadsheet, so I literally know who's who, when they joined, the dates, their student numbers, how much they paid. There isn't a single person who's paid the full fee for the course. Not that they owe us money. I'm simply saying there were discounts, there were price cuts. There was, it's Mother's Day, it's Father's Month. Oh, I just had a baby, here's a discount. You know, no one has paid $300 at all to 365 since 2020, 2019, beginning of COVID, even 2019, to do the course. Nobody on this earth, okay? And I only take 6 people at most, like 10 recently. 2019 was my biggest, but after that, I started cutting the groups very small and very small, because I know what the work it entails with the one-on-ones and me catching up with the lives and answering everyone's question. So if you think about it, 6 people paying anywhere between $100 to $150 to $180 or sometimes $200 for 2 months, because it's 8 weeks. I can't, you know what I mean? There's no ways. If people think I use the course to supplement my life, or they're worried about, when I say take the course, it's not a marketing thing. I'm not trying to push sales, right? I'm a professional trader. I earn from the markets. The course, however, does the stuff I don't have time to do in war rooms like this. I sit down with you every single day for 3 times a week. If you're doing the remote courses, exactly aligned that way. It's week 1, week 2, week 3. And it's me taking my time, ironing stuff outside on Sundays. When we're talking together like this, it's quick and fast, and we're all on the same page. Because we only have 2 hours to do this kind of thing. I can't talk for 7 hours. I'd love to, all right? So if you want to increase your trade, and I had to put that in as a disclaimer, in case people think I'm trying to push the course. Take the course, number 1, to improve your trading by 100%. If you've already taken the course, keep visiting it over and over again. It's yours for that. But number 2, back test. Oh God, back test this stuff. The type of confidence, the type of confluence it does for you is unimaginable. If you are more interested in becoming extremely independent, where your portfolio grows all the time, where you understand when you're wrong and when you're right, you have to learn and back test, right? It's not about, yes, affirmations are important. Now, I'm still to tell you about all this stuff that I have, that I use, but the information in your mind must be calm and settled. Right? Anyone trying to trade whilst trying to master, trade while trying to master, your results will look exactly like that. Up while going down, up while going down, all right? So please, number 1. But anyways, gold hit a demand, monthly demand. And we spoke about it. There was a turning point. There was a major turning point, a new major turning point. The stuff we talked about in week 1 of module 1, there was a major turning point, and gold started to fall. We expected this, we know it was going to happen. Fantastic, we're happy. Hit a demand, going back up, and then with some retracements. Then along the time, in anticipation, that's why I want to do that pricing in model. As markets were pricing in that 16 June. So there's a little bit of consolidation, and after 16 June, there's several FOMC confirmations. There was a whole lot more consolidation, right? But you can see here on the weekly time frame, just so you can get a sense of what that looks like, right? This is markets really taking their time. Like, look at this, 1 month to do such a big move. One week to do this red candle. 1, 2, 3, 4, 1 month and a week to almost try and recover. It's been taking its time, going back up, right? And for me, I always say I want gold to come back all the way down to 1.5. So when the day I go crazy on gold is when gold comes back to 1.5. I'm gonna go crazy on gold EFTs. I'll share that with you guys if you're in the Wealthy in 3 Years program. Shares, just you can do yourself, do your own research. You can do it. You can just find shares where they are good gold EFTs, and you buy that, right? Simply just buy that kind of stuff. Is when gold hits this low here. This is a very good place for me to consider buying gold. It is saying that I do want to see some long-term downside movement before we can go back to those 2,500, predictions of gold. That's what I'm saying I want to see. I'm not sure if I'll get it, but I definitely didn't buy gold crazy here. See here? I did not buy gold crazy at all day. I don't know if you guys can hear a crying baby, but I think it's a sign that I need to wrap this up. And I apologize for the noise if you can. I apologize for the noise. Right, so gold on the monthly hit a demand. Gold on the weekly hit a demand, but leaving slowly, right? Leaving slowly. Right, leaving slowly. See that there's that, that's the way that consolidation was at the bottom. Gold leaving slowly, leaving slowly. Right, gold on daily. Right, so it's the 16th June, right? FOMC level. This is a big red candlestick, right? So I am looking for some action here. And gold is very close to that. Gold got here because dollar was weak. Now dollar is strong since Friday. See, Friday. On Friday is a big green candle on DXY. Let's do this just so you can get the correlation, right? Because these are two safe havens compete. Excuse me. These are two safe havens competing. Oh, this is the DXY, right? US dollar currency. Yes, it is. Let's choose another one because it's got too many notes and it's not clear. Just remove this out of the way real quick. Right, there we go. You see the thing. So this is the DXY on this chart. This is gold on my left. So the one that I'm dragging right now is gold. This is dollar index, right? This is dollar index. This is dollar index, the dollar. This is gold. And if I draw a demand here, which is what we already know exists, we've got a strong dollar demand. Whether you take that area of competition all the way there, if you know what that is, or if you draw the reasonable body without it, changes nothing. There's a demand. You can see on Friday, we've got a green day for the dollar and a red day for gold, right? So there is an inverse correlation, right? Almost a 95, 98% inverse. They do the opposite of each other because investors have to choose. Are we putting money in gold? Are we putting in the dollar? What did the governor say? Where's my money going to grow? That's all inside a billionaire's mind. That's all inside a hedge fund's mind. That's all inside a banker's mind. Where will money make the most money? Will money make the most money in this market for 1 week? If yes, put it there. When they remove money from NASDAQ and put it into dollar, NASDAQ must fall. Your equities, your tech stocks must fall. So here, I've got a green day for the dollar, right? And this one. And on this chart, I'm going to remove gold now. I'm going to show you equities. Equities, stocks. So let's go with NASDAQ. And then I'm going to go to the daily. So you see, with so many lines, man, but please don't get confused. My lines just help me make better decisions. They are not support and resistance lines. I can tell you that much. We don't trade that at 365. We understand it, just don't trade it. Right. So look at this. This is the 30th of July. This is 30th of July. So this is Friday, right? Strong dollar push. NASDAQ first dropped. Look at this long wick, and if you want to see it better, go to the H4 time frame. (29th), so the day before, pricing in, markets price this in, and I hope you guys can see this, right? Just day before FOMC, or rather the interest rate, the PCE index thing that came out at 2:30, right, on the 29th. Bearish engulfing pattern, markets dropped in all the way into midnight of the 30th, then markets raced up, could not fully recover. And what's here on the left, right? A bearish engulfing pattern. I hardly ever sell indexes. I've seen people sell them on social media. I think they are very brave, good for them. They know how to catch them. For now, for example, this is a clean sale, right? And price could drop all the way down here, potentially. I won't take it because indices have a scary ability to recover quicker than you can even think about it, right? So I won't be taking a sell, but I can see why it would be sell. Number one. Number two, it definitely makes sense that price is going to a bearish engulfment because, again, if you look to the right of the screen, the dollar is strong. So potentially on the daily time frame for the dollar, there's nothing stopping it except for the fact that most retail traders are unaware. Like I said to you guys earlier on in today's war room, that there is a potential pro gap. Markets gapped here on the DXY. It's the only thing I'm worried about. There's a gap somewhere here on live trades. There we go, on the DXY. And that gap has the ability to slow price down, if not turn price around. Gaps show us the biggest imbalance in markets, right? So watch out for something like that. And if you consider the gap, where the gap is, and you throw in a bearish Fibonacci, I hope I'm making sense to people. It's the end of the war room though. I'm done, right? Something like that. You can see that your gap sits perfectly inside that 0.38 PCP level, right? So I'll be looking very carefully at that for the next 2 to 3 days because I know it's there. And if this continues up, I promise you this will have to weaken, because there can't be equal amounts of money in tech and in the dollar. Like, these guys are moving their monies around where it makes sense the most. And right now, markets have arrived at an area of value where supply sits demand on the equity side of things. But I hardly ever sell indexes, right? I hardly ever sell indexes. But yeah, so I sidetracked there. Let's quickly have a look at gold properly for the last time, because I know I've spoken about so many things. I haven't made a clear call on gold. XAUUSD. XAU, right? So anyway, so with this consolidation at the bottom, markets rallied all the way up. Right, this is a consolidation at the bottom I was talking about. Markets rallied. This was during dollar weakness, and then now we found out that, you know, dollar became strong on Friday, and the whole day, you know, markets were dropping. And again, it didn't happen by coincidence or chance. It happened at a supply, because that's how it works. So if you're into gold and you're not in the sale, you wait. You wait, and you wait carefully. I don't like that markets are dropping down straight. Remember, I'm trying to teach you guys this idea of looking for how the banks are accumulating price. But I am on a very big time frame, H4. So let's drop a bit and see how the sale is moving. I'm going to go to 5 minutes chart. Right. So on the 5 minutes chart, the red area is that H4 area where price has been falling non-stop, right? Price has been falling non-stop. And that green area is the area that I've just drawn now, where there's the potential, you know, chance of price, you know, buying up, you know, or the selling reversing, which means by the time price gets to this green area, if you think about it this way, the dollar might have arrived at a supply, and then that inverse correlation relationship will then continue. So I'm worried about that. Well, not worried, but I'm looking for signs of that. I can't see strong signs of accumulation, but it is there. I can't see strong signs. I mean, if I draw a trend line, it would look something like this, right? Which is perfect. And then if I draw signs of some, let's do that maybe. So if I use that as 0.1, then that has to be 0.2, then everything has to sit inside it like that. So that's not too bad. That's not too bad for accumulation, but it could be far much more better. So I'll be looking at structure like this, you know, throughout the London session. Oh, I would if I were you. I'm not into minerals this month of August. I'm just trying to keep that clear FX mind. And then fourth financial quarter, I'll be trading everything else, you know, like a crazy person, right? So what you don't want to see is, or you can see it. There's nothing wrong, but just be aware that markets can do this and still drop. Right, all the way there, right? So don't assume that this breakout means it's now time to become bullish, right? There's a whole lot of selling pressure there. But what would be nice to see is if price was now to then continue, you know, feeding the structure that exists. So something, right? So if markets now could then like you could start to sell. Essentially, there's a nice place to shoot the market. If you're one of those traders who like to trade trend lines, it's a perfect time to do that. I'm not a trend line seller, so because of that, I need a valid order block to confirm my selling. Otherwise, I don't take a sell. But if you are a trend line seller, markets have touched a valid trend line when price touches one, it drops. But for me, we don't do that. I don't do that anyways. I need more confirmation, essentially. If I draw a fib on this tiny time frame, you see that price is also at a golden ratio area. So that's helping that case to sell, right? That's helping that case to sell. But again, markets are very tight. So I do expect a little bit of a fake out and then a drop maybe. Markets are tight in that cluster. But if I was taking this trade, I would do nothing. I would just wait, because on significant time frames, markets have not yet given us a retracement since Friday's sell. That's something you must be always worried about. So this is what it looks like on the 1 hour time frame. There hasn't been a significant time. Okay, so you see where we are now. There's a PCP consolidation. So again, selling could make sense, to anyone there. But I personally wouldn't sell. If you're a 365 trader, you can take the sell at your own risk. But 5 minutes, trend lines, PCP on the 1 hour, everything is screaming sell, sell, sell. And when the charts are screaming sell, sell, sell at a technical level, I avoid it. I run away, because that's the language of retail traders, right? But on this particular drop since Friday, there hasn't been a specific retracement, a strong enough retracement. So what I want to see is this actually. I want to see a push up. So maybe dollar is weak on Monday or Tuesday. I want to see a push up, and then I sell to the downside, right? I really do want to see, much more significant type of consolidation. But if that does not happen, if I was trading gold, I'll simply wait for the buy. If that doesn't happen, I'll wait to see what's going to happen here. Bear in mind, this is not the nicest thing you want to see before your area of value, but this could hold. But go to daily. It could hold. It could potentially hold. If it doesn't hold, then you've got big problems, because it means you've got a very strong dollar, and that gold could potentially sink in the medium term, like days, 2 weeks, to all the way down there. But for now, it's still a sell. The question is, how low will it go, right? But I would want to really sell gold up there when you get to that area of value, somewhere here. When it comes back to these levels, FOMC, big candle drop, that's where I want to be with gold. That is where I want to be. Okay, that's gold done. Silver. Is it XAG? I think, if I remember. Yes, it is. Last time we spoke about silver in the academy, there were some buys, but that was like 2 months ago or something. Yeah, there was upward movement. I put it in one of the plans, etc., etc. I'm not in any silver trades right now. Like I said, I am focused on my minerals. Price seems to be flirting at heaven's door. I'm in bed with a lot of sellers. Just look at the 3-month perspective, just for 2 seconds. Right, so if I was a 3-month, if I was a presidential trader, this is what I'm seeing, and it's quite a big area of value, right? So let's make this red. Right, number one. Number two, if I was a positional trader, this to me looks like a continuation pattern, right, for the upside into that, right? So which makes silver bullish long term, like months to years long term. It's still bullish until it gets here. I would be worried about where prices stopped, but for the most part, the actual market trend is not there. But I would be worried. I can see that price is reacting to something here, and it's probably something on the governing time frame. Probably, I think. Yeah, it is. But there is a bearish engulfing pattern, right? So that's quite clear and easy to read about silver. So silver was very bullish right now, because gold has been trading sideways. Gold has been affected by the dollar. Silver is affected. That's why I keep saying, if you're part of the academy, please watch this video, because remember, silver is a mineral, and the primary market mover for minerals is gold, palladium, all those things, platinum. Oh, can I show you guys something? Jason and Albanus, can I share your guys' one-on-one trade? There's a trade that they took me to, which I think is going to be like the swing trade of the year, platinum. platinum, 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 platinum. But let's finish silver. It's a beautiful trade, and I haven't put a pending order there because fundamentally I'm not trading minerals, but I'm definitely going to put one on AvaTrade for my personal account. Definitely can't miss that opportunity. And I might be late because we did this like 3 weeks ago and I forgot to come back to it. Right, but anyways, we've got this situation here. Bearish engulfing pattern, strong supply, holding price down. Price is being stubborn, right? Look at this, fresh touch, retest, right? Price is very, very much being stubborn. If we're to imagine a world where silver falls, it would fall this far. I don't think that's going to happen right now, right? As long as COVID is on the rise, gold can fall, but not too far. And because gold can't fall too far, and we didn't have Bitcoin for a very long time, Bitcoin was also falling, right? These minerals are our backup plan. Excuse me. So imagine buying silver back at about 15 bucks per ounce. That would be amazing because right now it's double that price. But I don't know. I don't see this happening. But in any case, this red area is a presidential area of value. So we would adjust it to look something like this, maybe for that gold, for that governing area, number one. Right, so unfortunately, price is leaving a supply, and we can't ignore that. But I don't know how strong that supply is. I really do not know. I don't know if there's a point in drawing trend lines here. But if there is a point, markets on the other side of it, structural wise, we do have 2 touches only, but nonetheless, markets are there. You know, this at this trend been going down. Like, so you guys understand, at this area, it been like slanting down like this. So it could be draw two lines like this, where price is moving down. I hope you guys, we don't have that. I'm just saying, I hope you can imagine if this been happening where price is moving down, we could have said we've got a bullish flag and markets are going to break to the other side, but we don't have a bullish flag on this particular chart right now. So we've got an interesting problem where this could be a fake out, number one. Number two, could be the beginning of a drop. And if it's a drop, then I must accept that it's a drop. I mean, it's just me saying I can't believe silver, blah, 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 would fall this low, because obviously I've got a portfolio and it's quite indebted in silver. Silver was a cheaper thing to buy than gold, so I bought a whole lot of silver for the portfolio. But still, if this is to happen, if it's to fall, then I'm happy to rebuy again there at about 18 bucks. But right now, I don't see it. Right now, this is one of those charts where, Mr. Alex, my answer would be, you know, it's looking like a seller's market. I would not be trying to buy. Right. So if you look on the daily time frame, the area of control this week is going to be somewhere here. If silver can make it up there to make contact, we're in trouble, because essentially what they're going to do is they're going to pull in some retail money into this area of value and then just punch against it, right? So there's a big possibility of that, and everything outside the structure is in trouble. And then maybe you'll get some type of slowdown here, but by then it'll be pointless, right? Like markets would have bled through properly on the silver side. Okay, that's silver, USD CAD, gold. So all I have to do is show you guys platinum and China 50. I just want to see if that platinum trade, but I always forget the ticker for platinum. I always completely forget it. So now I might not be able to show it to you. This can't be this one. Is it this one? Looks like this one. Can someone just, in the meantime, just be doing some research for me, the ticker for platinum? So I'm looking for, like, is it X something? There we go. Never mind. I think, is it? I think it's this one. It's looking similar, right? They all look similar. So I'm going to say, yes, it's this one. Then I'm going to do a couple of things real quick. Guys, I think this is well worth a long-term trade. A trade that you don't interfere with. A trade that you just buy, and after a week of buying, you put your stop loss on break even and you don't touch. Or you touch to add, and add carefully, and you tell yourself that you're learning to trade from a guy who built his entire trading career around these three numbers, 3, 6, 5, which means something. It's not a random name. It's days. It's how long it took me to hold a trade that completely changed my life. This is a 365 trade. This is a fundamental positional trade if it works out. If it works out, right, on platinum. And what I'm looking at, right, so here, let me tell you the theory about these triangles when they're formed. When triangles are formed, you take the distance of the base. See that base there? You guys can see the triangle, right? If I draw a horizontal ray from there to there, right? You can see that now. See the triangle? Let's make the triangle red. My oldest students are 65-year-old. Bless his heart. He caught me at a time where I was so free. So when I used to teach Dr. Francis and these guys, we'll be like 3 in a class, like and there was no structured syllabus. So I noticed I've been teaching people every day for 3 months. Like they'll just show up for class every day. I'm like, all right, guys, let's talk markets. And I did the same thing for a senior citizen who wanted to learn how to trade at 65. And he's trading his pension. Basically, this is his 3rd year now. He's got a 6-figure account. It's beautiful. He hates how he claims he wasted his life, blah, 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 blah. But long story short, there were some patterns like the triangle that you just couldn't see, no matter how I drew them, like until I changed color. So that's why I'm changing this color. I was just reminded about the story now about the triangle, right? So this is a triangle, right? You can see it's a triangle. Now you always take the base of the triangle, and what you're doing here is you're doing what's called a measured move, right? The theory is if markets break out of the compression from a triangle, and this side, the break is to the upside, which makes a lot of sense. If you look carefully, in a buy profile asset, if I've told you before how to profile your assets, it's a buy profile asset. Even if this happened, it's a buy profile asset. It has failed to return to its major turning point demand, can't go all the way down there. It's a buy profile asset. So what you do now is you take this measured move, right? You measure the base. I come to TradeView and I use the information line, and you simply draw it, and it'll tell you how big the area is in pips, value, dollars, percentage, etc. And you can see it's very close to that 61.8% that we want, right, for discounts. And then I'm just going to clone it. I'm going to clone that same line, and it's going to give you the exact replica length of the line. And you're just going to put it at the tip of where markets broke out. Do you understand? So I'm just going to draw another horizontal ray here to carefully map out where markets broke out. Right, make that line, not as thick. I'm just showing you something because I think this is important, right? And you can trade this as many times as you want, but I do think this is a very good long-term trade. Oh, this is a very, very good long-term trade. So I'm just going to get this line at the base of there, right? So something like this. So this is my measured move. See that there? So what I'm saying is I want the up, no, not that I want, right? But it's expected that the same move measured to create the base going down will be at least the first impulse move up. All right, very big impulse move up. Now, if I've taught you before, you will realize that 9 out of 10 times, sometimes they'll break supplies or stop at a supply. And this is the major turning point where platinum removes its own old supply because a buy profile asset, right? So this, you want to take trades like this to your mother and say, Mom, meet the next wife or husband of my life. This is a trade you want to marry, right? So it sits perfectly on an order block, which I love, right? And shout out, and this was a trade, I was asked to go over it, but this was a trade found by 2 365 students, Jason and Mr. Albanas, Jason from South Africa, Mr. Albanas from Kenya. I think they're doing a mastermind between the two of them. It's whatever. It's an amazing way to accelerate growth, right? So look at that. So I've got a strong, beautiful demand there. I love this a lot. And I think when we last spoke about this thing, markets were still dropping somewhere there. So it's nice that it's still falling. All right. The only worry with assets like this is already there is an opportunity for price to stop at a golden ratio. Right, which is where it is now, and if this red candlestick feels, you know, and we're going to see how the month of August is going to be, because this is July. July ended on Friday or yesterday, or whatever, right? And we've got a problem. I hope markets don't do that. I hope markets drop a little bit more. And if they drop a little bit more, to be like just recognition of that they're not coming back here ever again. I'm going to draw two areas of competition, delete the Fibonacci so it doesn't confuse you with too many lines. And this is what I'm looking at here. I'm looking at markets coming down. So a smaller count area of competition is all the way here, right? Down here, this one here. That I'll make it purple so you can see it, right? And then this is a banking area of value. So that's the area of conflicts that we have. Banks might buy first and push this thing up before we can. Right now, you can see there isn't a perfect order block at the banking area, right? So for safety of our accounts, I would remove it. And I would wait for this bullish engulfing pattern right here with the purple one. But if we get that, guys, if we get this will be it won't be an easy climb, number one, because we have to deal with this PCP, we have to deal with this 365 candle, we have to deal with this bearish area here. But eventually, when we're done with our choppy climb, our choppy accumulation climb, at some point in time, we'll get to a place where we say there's nothing stopping us except for the top, right? So this is one of those accounts where you build up enough capital, you have a good lock size, you get locked in and you hold, you treat it like a good plan, right? If it's a good plan, you take the good plan. I mean, if it is, you know, a year from now, 2 years from now, we can be really talking about a crazy long-term trade that you took. So I'm really looking forward to action here. And I hadn't put a pending order yet. So I'm glad I remembered about platinum, because I thought I would, then, you know, I forgot. But I have my trading plan in front of me. So let's look at that. Right, China 50, then we're done. China 50, then we are done. This is CN50. Everyone was basically on the live on YouTube is still around. Guys, I appreciate you. I'm assuming it means you're enjoying the stuff. The Zoom room is still got the same people. I really, all of you, you know, you guys warm my heart. Thank you for watching. I hope it's worth your time. I mean, I'm here to talk to myself as well. If it wasn't for a war room and a camera, I'd be doing this on my Sundays. Weekends are for I have to trade. Right, so China 50 did this mind-boggling thing. Oh my goodness. It is the first time I've been so excited about a stock market, because when a stock market does something new, there's finally something new to learn. I sent this on our private Telegram group a while back, and I was like, listen, guys, look at all these monthly demands. Held. This will hold. The next day, literally, I don't know, maybe 8-9 hours later, it did not hold. Like markets just zooped in, literally took it up and took a hold at 14,500, right? This is a China index. Real quick, because I keep saying I'm going to do a video on the China stock market, and I might not because of time. The government is cracking down on the Chinese firms, right? So let me see if my notes that I prepared for you are close by. And then I can just give you some basic stuff. I write a lot of notes on notepads, and then I never get around to doing the videos. Right? Yeah. Okay. I've got them here. So you want to see them? Maybe you think I'm making this up. I have YouTube notes, this notes, that notes, but then we can just read them together, and then we can just quickly look at the chart, so you can really understand, you know, the Chinese stock market and it's affecting China 50. Because I think it's Edwin who asked me for this. Right, Edwin, I hope you can see my notes, and everyone else. Right. DXY CPO on Tuesday. So I think I've done all these videos for you guys. For those of you to be hawkish, I already did a video on this kind of stuff. So this is the thing I haven't done yet. Right. So Chinese stock market. Right. So ironically, there's a big crisis, right? And whenever when the markets are crashing, remind yourself, crash equals opportunity. Millionaires and billionaires are made during the worst, and it's so sad, but that's just how capitalism is. All right, I can't tell you how many people got rich off COVID. I can't tell you how many governments used that opportunity to tank their stock markets to buy into companies in their own countries. I cannot emphasize this. It's impossible. Everyone who understands how markets work, who looks at numbers, knows that crisis equals opportunity. Now, So that's the first thing I wanted to say on if I'd done a video to explain all of that stuff, but there's no time here. Right, so there's a big crackdown. So Alibaba, you guys know Alibaba, he's like the Jeff Bezos of China. He runs an Alibaba website, like e-commerce. Super rich, Chinese guy has been in the longest fight with the communist. China is a communist authoritarian government. So if you think, I'm always in South Africa, I'm a social scientist, so I do write, peace political thought articles about democracy, economics, and how society works in South Africa. It's part of my job at Rose University, where I'm studying for my PhD. And sometimes I always mock the South African democracy system. Like, guys, it's really democratic. People vote for politicians, or politicians really do their jobs, and I give a big analysis around that. Or speak about a place like Zimbabwe, where we say it's a predatory state, right? The government does its own thing there. It just lives off its people. But my goodness gracious, it's not an African thing, right? China is an authoritarian communist government. And that means when these guys decide they want to smash the market, they are going to smash the market. Now, I know I've done this before in class, but I haven't done it before on YouTube. So if you're new, and you've never seen this before on YouTube, I'm quickly going to do a very quick thing. Because remember, the Chinese government is crushing the Chinese stock market. Just remember that. And we've been asked to look at China 50, which is the top 50 Chinese performing as a good index of China's economy. Now, let's Google something real quick, because I want to show you how small this group is. How many billionaires? I know I've done this in one of my classes just to make a point. Look at it, there are 2,755 billionaires in the world. COVID 2020 saw an extra 500 and something billionaires, which is the biggest amount of billionaires in 1 year, being added to the list. There are 8 billion people. There are only 2,000 billionaires. Crazy. Number one. Number two, let's change the question. How many billionaires are in the Chinese parliament? So hilarious. Look at that, 100. China, not China, the country, not Alibaba, venture capitalists, not the tech guys who run finance and Haimata, where I bought shares for. No. Inside the actual parliament, for a small group of billionaires in the world, 100 of them come from China. For 2,700 billion in the whole world, 100. I can't even tell you how many millionaires there are in the Chinese parliament. There are a lot of millionaires in the Chinese parliament. Now, most of these billionaires, 100 of them, are invested in China 50. It is the same people in parliament who are also part of the Chinese government crushing the market. Why? Why would they do something so inversely that would direct their wealth? They are billionaires. They invested in China 50, China first, a communist country, no foreign direct investment out. It's a policy. Invest in your own, right? It's like a weird thing that we try to do in Africa here that leads to xenophobia. China does it extremely well because they're authoritarian, but they're crushing their own markets. Why? Because, comrades, before you can buy low, you have to get there, to get to the low, And this to me was surprising. I expected the crash to happen. I expected this demand to happen. They removed the demand, right? So Tuesday is the 3rd. It's going to be an interesting time. But just to quickly finish the quick tutorial or the video, so I don't have to do the video and I can say I spoke to you guys about the Chinese market. Let's just quickly finish what I had there. So I looked at the main, bigger contributors of China. So when you look at indexes, NASDAQ 100, Dow 30, FTSE 100, not all companies contribute to the one index equally. Some companies carry a bigger share, right? So you'll see here, they did a crackdown on Alibaba, fined him $2.8 billion, which is nothing to that company, right? But they fined him for unfair monopolistic practices, right? So Alibaba is a big monopoly. He started telling people that if you want to sell my stuff or sell e-commerce stuff, it's like Amazon, basically. It's like the Jeff Bezos of China. Amazon, they sell, it's an online big store, right? He started like putting unfair usage policies saying only you can buy from me if you're going to sell for me, something weird like that. and the authoritarian government that doesn't allow people to think for themselves say that's unfair. Ironic, right? Anyways, they went after him for that, crashed his stuff, and Alibaba as a stock dropped about 40%. Beautiful opportunity in there, right? If you're in the stock markets, if you're in the wealthy in 3-year program, or if you're just trading stocks, or you're trying to invest long-term for yourself, make sure you've got a broker who will give you access to Chinese markets as well, because there's a lot of good stuff in there, right? Imagine something as profitable as Alibaba dropping 40%, like 42%, 41%, something ridiculous like that. It's something ridiculous like that, right? And I'm not yet, okay, there's my information. 42%, literally fell 42%, right? The screen 3 should be in front of you, you should be able to see it. And I'm not convinced that this is going to hold. And if it is going to hold, then I better get in now. But there's a gap down again, but it could be a pro gap, right? Trying to catch price up. This is a stock market. So that's at play. I've taught you before. You know what's up. You know what we do, right? So I definitely need to buy some shares tomorrow into this thing. So this thing is currently selling at about $194 per share. This is the kind of stuff you want to put your children's name to. Buy 2, buy 3, buy whatever your budget allows you. Put your name, put your kid's name, and forget about it. That's the goal. Forget about it. Come back after 5 years. Forget about it. This thing was at about $325, so you're getting it at $100 discount, roughly. 100 and something US dollar discount, right? So it's quite big. And then the other reason was there's another company called Tencent. You know, in South Africa, there was this big wave of people going to teach English in Korea, teach English in China, teach English here and there, right? So Tencent is a big mother company. It's like sorry. Didi is the one I'm talking about. No. Number 4, private Chinese education companies in general, all of them, right? Those teach English here and there. There was a clampdown on that about practices and lockdown and how children are feeling isolated from their culture. And so now, if you want to do teaching in China as under one of those companies, just so many to list, so I didn't bother to list them, you will literally have to do it as a non-profit organization. You can't extract Africans to go teach English in this country, in China specifically, for a profit, right? So imagine a company and your value base is getting labor of qualified degreed people who can teach English fluently, coming to China to teach English for a year or 2 years, and then not being able to, you have to pay them, but your company can't make a profit. Who's going to want to do that job, right? So they literally just changed the whole education policy overnight. Literally say, look, man, teaching for these guys nice to be non-profit and no taking foreign capital out of China, right? So they just think they killed the private education sector. So those companies fell. And then we had Didi, which is basically like Uber. Didi is like, you know, literally Uber, the American company. Didi is the Chinese version of Uber. And Uber or Didi was fined for violation of like data policies just after they had gone IPO. IPO is when a company goes public, when they finally launch and say, we want you to buy shares in our companies. Let me just pull up the Didi chart for you. It's insane. As soon as they went public on the New York Stock Exchange, now watch this, because these are billion-dollar companies, right? Someone's going to hire a lot of expensive lawyers. There's going to be fighting for 6 months, 18 months, 12 years. It doesn't matter. But where are you going to get a highly based functional? It's not like the CEO of Didi can just give up on his dream, right? People, these are high-paced individuals, high-performance individuals. They're going to find a way. I guarantee you they're going to find a way. It's not going to be an overnight solution. But where are you going to get a high-tech global company like this that just went IPO, like literally public in June, and is currently at about $10 US. Where are you going to find a company like that? With $100 US, you can buy 10 shares for your kids, for yourself, for your future, whatever. What about with $1,000 US at this price? Let me pull out Uber. Let me show you Uber. In 2019, when Uber went public, when remember Didi is like Uber, when they launched public, I phoned everyone, I put it on Facebook, I said Uber is this, Uber is that, Uber is public, buy Uber shares now. People are like, why? Why is this guy telling us to buy Uber shares? They started here. 2019, that's when they went public. It's on the charts there. 2019. So it's 2021. It's been less than 3 years, almost 3 years. It's been 3 years now. And if you bought anywhere up here, because I called you or you knew for yourself or whatever it is, there you are. You bought this thing at 42. There's something called dollar cost average that we talk about when you're talking about being wealthy. As price drops, just keep buying because you're buying it cheaper and cheaper and cheaper. Let's say eventually you bought here because Didi is currently at about $10, which is the lowest point where Uber was at $14 US. So you buy these shares at 14. Let's say you buy 10. Let's say you buy 100. So you buy 1,000. Doesn't matter. Price today, and it looks like it's dropping down, is currently at $42 US. And I think it's coming here. So the next people who can buy Uber shares have no choice but to settle for $38 US per share. Because that's it. Whoever bought down here is king, right? Whoever was buying during the dip is king. And I'm saying these guys, the same billionaires in government, are crushing these big high-tech companies. It's registered in the New York Stock Exchange, and it's because of that, it's plummeted all the way down to $10. And I'm telling you now, after a year, this chart will be here. After 5 years, this chart will be here. And then after 10 years, this chart will be there. And you're gonna wish to have bought here. Crisis equals opportunity. So watch out for that kind of stuff. And the last company is called Tencent. At least part of the whole chaos. I might still feel the need to do a whole video on the Chinese stock market if people are interested. But yeah, Tencent is a massive internet company. It's like the video game of all video game type of company, high tech, blah blah blah. It's also down 41% like Alibaba. This one is in trouble for data. They sold their consumers' data or used their consumers' data in a weird way. Government cracked down on it, right? So that's why China 50 in general is falling, right? For those of you who are interested, that's why it's falling. Now, what to do? Watch it carefully. Watch it carefully and watch it a lot this week. If I've taught you before, you will know that our indices, when it comes to supply and demand, must be treated in a very specific way. Guys, I know I've been talking for a very long time. I appreciate all of you who are still around, who are still interested in learning. I know, it's been a while. Right, so we've got a situation here on the daily time frame that I'm watching for. It almost looked like markets are gonna recover inside that monthly demand that it broke, right? So we don't trust it right now. And then the rally, look at this, the rally is buying, so all rallies in China 50, red green, have been sold. Every time market's ready, there's a sell-off, right? So this rally is quite interesting. Now, I like value-based demand, so this could be a base, right? Number one, I'm optimistic for that, but not really anymore, because once they break a demand, it tells me something else. But the recovery, like Bitcoin, right? Bitcoin broke its weekly demand and then shot up. So there's still a high chance that this could break and then shoot up, but it means we can never buy again there, right? It means that they've really opened the floor, right, for a further move to the downside or trapped us out because we don't know what their movement is. But for now, these markets are going to bleed, I think. So I would wait to see what happens in the first week of August. And the reason I say that is, generally speaking, markets in the past, when they set on a monthly demand, in that first week, we saw, action. And today is the 1st of August. So we'll have to wait and see, how this situates itself, But honestly speaking, I wouldn't be surprised if this thing drops all the way down here now. So just to be exact, I would try to, my first buy now would be at 1400. And even that might be early. Let me just have a look on the weekly chart. Yeah, oh, that's perfect. That's perfect. If you've got a big account, then you can have you can hold it, right? But if you don't have a big account, all you have to do is just be smart and do risk management. The reason for that is you want to be around. You are far much more better making $1,000 than losing your $200 account. Use this lot size that suits your account. Don't try and breach overnight, right? But essentially, between 1,400 and 3,300, which is big for an index, guys. Indexes are costly, man. That's a 700-point difference. There's going to be a buy in here somewhere if this doesn't hold. So if this week it doesn't hold on the weekly day, even on the weekly, we need a green candle on the weekly. We need this before this happens. Something, you know, some type of relief. But if it wants, it can just drop straight, right? But I would try and target this area at 1,400. Remember that there's a 700-point difference between this and this on the weekly time frame. So the smaller the account, the more micro you have to be. You got to zone into your areas of value. Number one. Number two, maybe you with a smaller account have to wait here. Let's see what that looks like. That's a bit in. You might miss it because of area of competition. So let's try this one. If you don't know what I'm doing, it's okay. It's all right. We will teach you. We'll teach you. Take the course, man. I mean, it is what it is. Guys, on the 9th of August, I am launching our first 365 ever women's thing. And I'm gonna make a proper announcement tomorrow. I just remembered. It will be an annual empowering event for 8 weeks. It is around the trading course, but we will talk about a lot of other things on how to incorporate grassroots finance into people's lives, into people's homes. So if you know of any people who need to join that, you should let them know to check out our page. Announcements should be out by tomorrow. Right, so if you've got a small account, you're looking at, I'm very excited about that program. And obviously, if you're not a woman, you're more than welcome to join. It's just that it's Women's Month, so women will get like a 60% discount or something like that. But anyone can join. And if you've done the course before, 90% of the stuff being taught in that room is the course, right? So it won't be like secret new stuff for that group only. But I will be giving them practical finance lab situations, right? So I've finally done that stuff, and I want to do that every year. From August to September, we block 365 for Women's Month. I can't do it in a month. I need 2 months with people to really teach them stuff. So yeah, I'm looking forward to that. I really am. It's $180 if you're a woman for 8 weeks, which is, again, I'm not, please, it's cheap. It's ridiculously cheap. There's nothing in my life that I learned for $180. So I don't even want to hear that stuff. But come if you want and you're prepared. Small accounts, 13,300 US, 13,900 will be a good buy area. If you've got a big account, then you wanna catch it at 1,400, but just know that there's a 700-point difference between stop losses. Small accounts, you can't hold 2 demands. There's 1, 2, you can't do it. You'll burn a lot of money. So you need to get out at about 13,600, right? So that means for small accounts, you are holding 300 points. So really keep the lot size as basic as possible. There's a 300-point area of value. For big accounts, it's almost 700 points, right? Just depending on what you're trying to do, right? And then the way back up is treacherous. It's treacherous because you can imagine how many Chinese hedge funds are bearish on China 50, right? For example, your first supply is what you're looking at right now. Right now, if we get a buy here, guys, at 1,400 or 13,900, then you know hedge funds are waiting here, right? But for people, small accounts risking 300 points, your risk to reward is going to give you back, I don't know, about 1,000 back, right? About 1,200, right? So it's worth it if we're right. If we're right, it's worth it. Ladies and gentlemen, I'm going to call it, quits. I'm going to call it quits before I lose my voice. I am looking forward to everyone's comments. Thank you for joining me on YouTube. I appreciate all of you. Appreciate all of you. I will be signing off now, guys, and I'll be keeping you guys up to date during the week. But we covered quite a lot tonight. Please note, I have a big promise to keep. I have to come up with a trading plan, share it with all of you for free. So I'm going to try and use the most of my tomorrow doing that. And then we'll have a look. But if that's not, I think that's everything, guys. I really, please save this live. Save the live. Nancy, hi, Nancy. All right, cool. I'll save the live. I will extract the video somewhere. I forgot to record on Zoom, but I'll make a plan. Guys, I appreciate you. I thank you so much for your time. Let me know if they should. I'm free on Monday, so one of the announcements I'm going to make tomorrow is, should we have war room on Sundays and Mondays, so twice a week? Because someone was like, we should, slow pace. I don't know. So it's just a thought. But yeah, see you guys. Thank you so much for your time. Shake my hand in the Zoom room. In the Zoom room, there's no lag, so you should be seeing this sometime. I'll see you guys I guess during the week. Appreciate you all. Have a good night. 365. Shake my hand. Good to see you guys. Shake my hand. Thank you on the Zoom chat. Thank you. Short Wazile. Appreciate. Cheers, Alex. Thank you, guys. Have a good night, everybody. Have a good week. Thank you, David, in the Zoom room. Thank you all. I'm gonna stop, ne? Can say bye-bye forever.